Strategy is a Pine script that can simulate trades for backtesting and forward testing. Strategies have many of the same capabilities as a Pine study, also known as an indicator. They may plot data, but they also can send, modify, execute, and cancel buy-sell orders, simulating trades right on your chart. In addition, strategies have access to important performance metrics through built-in strategy keywords. These metrics are also shown in the Strategy Tester tab on Tradingview. When you write a strategy in Pine, it must start with the strategy annotation call instead of study. Backtesting is the process of recreating the logic of your strategy on historical data in order to evaluate how effective it would have been. Backtesting is a very important step in optimizing, building, and verifying your trading strategy without risking funds. Backtesting in PineScript is very easy once you have a PineScript strategy. All you have to do is add your strategy to the chart, and Pine will automatically run your algorithm across all of the historical data. It's true that every diligent investor should analyze their strategy through the lens of a backtest, but one should also keep in mind that backtesting results will always contain a margin of error, and historical performance is not indicative of future results. Every strategy should also be forward tested before putting real money on the line. Similar to backtesting, forward testing is a way to evaluate the effectiveness of a strategy on real-time data. Forward testing is also a very important step in verifying your backtest results without risking funds. Forward testing is also very easy in PineScript. It starts immediately after the backtest finishes. Once you add the strategy to your chart, just let the data update through Tradingview and your strategy will continue to run automatically. Just be sure not to refresh or switch charts or all the new data will be converted to historical data.
There's a lot of reasons why someone might want to build a strategy. If you're just getting started, you may or may not have a few reasons yourself. In this lecture, I'm going to cover some of the best reasons for building a strategy. Of course, these are of my own opinion, so even if that doesn't matter to you, this should at least motivate you to develop and understand your why. Because if you don't have a why, then why are you even doing this? One of the major reasons I started learning Pine was to free up screen time. I started down this path because I was spending too much time in front of the charts and wanted to automate what I was doing so I could sleep, eat, and, live my life. I used to be a real chart junkie and it wasn't healthy. If you manage to build a strategy in Pine, you can set it up on your favorite charts with alerts and only check the charts when you get a signal. Now, you don't have to frequently scan every chart searching for your next trade. You won't miss that next setup and you won't miss breakfast, or sleep for that matter. Another reason to build a strategy is to remove human emotions from trading, like fear and greed. You might already have a winning set of trading rules, but thousands of years of human psychology are working against you, and somehow you're losing money. Congratulations, you're not a psychopath, but you still need to make money. Maybe you just need to learn how to chill, bro. Look, I'm not here to give esoteric advice on how to find your zen, and I certainly don't recommend removing your amygdala, that part of the brain that's linked to fear. Just maybe stop fighting the inevitable and let the robots take over. There are so many winning strategies out there right now, for free, on the internet. But they won't work if you don't have the discipline to follow them. And even if you do have the discipline, you likely can't outperform the discipline of a computer. Unless maybe you're one of Elon Musk's cyborgs. Another great reason for building a strategy is that it forces you to plan for success. If you don't have a plan, you'll always be overwhelmed by questions and information which will cloud your judgment. Sure, you can just wing it and maybe you'll get lucky, but luck will only get you so far. Everyone says to treat trading like a business, so why not start with a business plan like all successful businesses? Building a strategy in Pine will improve the strategy itself. You know how the saying goes, you can't improve what you don't measure. Well, strategies in Pine force us to pay attention to the details, like if we are performing well or not. We are forced to be honest, which is the first step towards improvement for anything. Building a strategy enables you to become an independent trader. Once you start to dig into the logic of a trading strategy, you will no longer be at the mercy of self-proclaimed internet gurus. You don't need a signal group and won't need anyone else's opinion, because you will understand the methodology behind a winning strategy. You won't have to live with that feeling of doubt and uncertainty anymore. You are the captain now. Some more notable reasons to build a strategy in Pine. It allows you to adapt the strategy to a particular asset or instrument because you can test it across all instruments in Tradingview and find the best fit. You can rapidly test and research different conditions that might impact profitability. And finally, it provides real-world stats that will lead to realistic and detailed expectations on profitability, drawdown, risks, and required capital. Anyone with a free TradingView account can build a strategy. However, to do it effectively, you will need to know your way around the PineScript language. All you need to do is open up your Pine editor and open a default strategy like this. If you look closely, you can see this gives you everything you need to run a strategy. At the top, we have the strategy annotation. Every strategy needs this. One of the main differences between a strategy and a study is the use of the strategy function instead of study. The other main difference is the use of special commands that start with the word strategy. We can see a couple of these down here with the name strategy.entry. This default starter strategy gives us a trigger to go long and a trigger to go short when some simple moving averages cross each other. Now all we need to do is click the Add to Chart button and we're done. After adding the strategy to your chart, the code will compile, and if there are no errors, it will automatically execute across all of the historical bars and then continue in real time on the newest data. We can check out the chart and look for the trades showing entry and exit labels with corresponding trade amounts. We'll also be able to see the performance of the strategy in the Strategy Tester tab, which is exclusive to strategies. Congrats! We just coded the moving average crossover strategy with a few clicks of our mouse. If you want to mess around with some more strategies, you can check out the public library. There are lots of free strategies in here that you can use. I highly recommend checking out some of these from time to time to learn new techniques and see what's possible in Pine.
When you add a strategy to your chart, a report of your strategy's results appears in the Strategy Tester tab. There are 3 sections included in this report: Overview, Performance Summary, and List of Trades. Every time the chart receives new data, the report is automatically updated. This is where forward testing begins. Every strategy has parameters which affect the calculation and results. You can change these parameters in the settings of the strategy or in the code. Strategies can be published just like any other script written in Pine. Additionally, a report of the strategy's performance will also be published with your script. In the following videos, we're going to cover the Overview, Performance Summary, and List of Trades tabs in detail, so you can get the most out of the Strategy Tester tab. Okay, check it out. If we look at the Performance Summary tab, we can see every available metric for the strategy's cumulative performance. These metrics are split into 3 columns. The All column shows metrics for long and short trades, where the long and short columns show metrics for long only or short only trades, respectively. Each metric is white if it's positive or red if it's negative. So let's take a closer look and examine each one of these metrics. Net profit. This is the total profit or loss of the strategy from all winning and losing trades, including commission. So if you summed all the values from the profit column in the List of Trades tab, this will be your result. This metric can also be found in the Overview tab because it's pretty important. The next one up is gross profit. This is the same as net profit, except it only includes the winning trades. Next, we have gross loss, which is the opposite of gross profit. It is the sum of all losing trades. This is also an important metric, and you'll want to spend most of your time here analyzing and reducing your trade losses in order to improve your strategy. To understand these metrics a little better from a mathematical perspective, we can see that net profit increases when gross profit increases, or net profit increases when gross loss is reduced. The next metric is max drawdown, and this metric shows us the greatest loss of equity during the test period in absolute and relative terms. So the top value is an absolute dollar value, or whatever currency your strategy is denominated in. And the bottom value is a relative percentage loss and will show the greatest percentage loss. These two metrics are tracked independently because they can be different. For example, if your starting capital is $100 and decreases to $50 after a few losing trades, then the drawdown will be negative 50 in absolute terms and negative 50% in relative terms. If you continue trading and increase your equity to $300, then drop it back down to $200, the metric will now show negative $100 for an absolute drawdown, but still negative 50% for relative drawdown, because 300 to 200 is an absolute drawdown of negative 100, but only a negative 33% relative drawdown. So the latter value of negative 50% remains as the maximum relative percentage drawdown. Buy and hold return. This is how much money you would have made if you just bought the security when the first trade was entered with all of your starting capital and held it until the test period was over. It's a useful benchmark to help you decide if your strategy is really worth it, because if you can't beat the buy and hold return, then what's the point of even trading? Just remember though that this metric is based off the first entry, and that first entry could be in a much different market cycle. No matter how good your strategy is, it won't beat buying Bitcoin at 1 cent and holding till now. Also, you may not want to hold a single position for 10 years with all of your investing capital. So keep in mind your time horizon, your risk profile, liquidity requirements, and diversification when taking this metric into account. Sharpe ratio. This metric is used a lot by portfolio managers and traders to measure reward to risk by comparing the returns of your strategy to the returns you could get from a risk-free asset. A risk-free asset is an asset which has a guaranteed future return, like U.S. government bonds, because no one expects them to default. The Sharpe ratio also takes the volatility of the returns you generate into account. It specifically looks at volatility as a way to measure risk. The reason for this is that if you are taking on extra risk, you should be receiving extra rewards. As such, the Sharpe ratio can tell you if your extra risk is worth the reward. Typically, a ratio of 1 or better is considered good, 2 or better is very good, and 3 or better is considered excellent. Profit factor. This is your famed profit-loss ratio, which is calculated by dividing gross profits by gross losses. Generally, you want this to be greater than 1. Max contracts held. This is the largest position your strategy held at any one time. Open P&L. This is your open profit and loss. If any trades are still open when your strategy finishes its calculations, the current running profit or loss will show here. If no position is open, the value returned is NA. Commission paid. This is the total amount of money that you would pay your broker. Commission is paid when opening and closing an order. Total closed trades. This is the total number of closed trades your strategy has completed from entry to exit, both winning and losing. This number should be large enough to be confident your strategy has been tested across enough samples. Total open trades. This is the number of trades that were opened and currently still running because they haven't been closed. Number of winning trades. Pretty self-explanatory. This is the total number of winning trades generated by your strategy. Number of losing trades. Also self-explanatory. The total number of losing trades generated by your strategy. Percent profitable. Now this is a percentage of winning trades your strategy made out of the total number of closed trades. It's not a very reliable measure of performance alone because it doesn't take into account the net profit generated by your winning trades. Considering that a winning trade is defined as a positive return, you could have a 99% profitable strategy that still loses money. If 99 of your winning trades only made a profit of $1 and the one losing trade lost $100, that's still a losing strategy. Average trade. This is the average profit or loss per trade. This is an important metric that is calculated by dividing the net profit by total closed trades. Also known as statistical expectancy, this is a much better metric than the typical profit-loss ratio we find in the profit factor metric. You'll want to pay attention to this one when analyzing your strategies. Average winning trade, this one's self-explanatory. This is calculated by dividing the gross profit by the number of winning trades. Average loss trade, also self-explanatory. This is calculated by dividing the gross loss by the number of losing trades. Ratio average win divided by average loss. This is a ratio between the average winning trade divided by the average losing trade. In a similar light to the percent profitable metric, this value is not very reliable on its own because it doesn't take into account the amount of trades taken. Now take the same example as before, where we have a strategy that makes 100 trades. Say 99 of those trades profit $10, and one of those trades loses $100. So the ratio here would be 10 over 100, which is not a very good reflection of our strategy's profitable performance. Largest win trade. This one's self-explanatory. This is the most profitable trade in the test period. Largest losing trade, also self-explanatory. This is the biggest losing trade in the test period. Average number of bars in trades. This is the average number of bars your strategy was in the market. Average number of bars in winning trades. This is the average number of bars your strategy was in the market that resulted in a win. Average number of bars in losing trades. This is the average number of bars your strategy was in the market that resulted in a loss. So in total, there are 24 metrics to measure a strategy's performance. The ones you'll typically want to pay attention to first are net profit, average trade, total closed trades, Sharpe ratio, buy and hold return, and max drawdown. The Overview tab provides key performance metrics for the strategy in a visually intuitive way. All the metrics found here can also be found in the Performance Summary tab. There are 3 charts in the center that all use the same X and Y axes: drawdown, equity, and buy and hold return. We can toggle them on and off by clicking these buttons here. The drawdown chart shows us the drawdown across all closed trades. The trade number is on the X-axis, and the drawdown is on the Y-axis. We can toggle between absolute and percentage here. The equity chart shows the equity across all closed trades. Its absolute and percentage values will be placed on the left side of the Y-axis, separate from the drawdown labels on the right. The buy and hold chart shows us what our equity would look like if we just bought and held from when the first trade was entered. These charts are meant for general analysis of your strategy. You can play with the parameters of your strategy and watch the charts update to quickly find suitable parameters. Just don't waste your time fine-tuning parameters here without proper cross-validation techniques, or you will risk overfitting your strategy to that particular data set, and it probably won't work as well in forward tests. You can also change to a different ticker and time frame, and the charts will recalculate, as some strategies are specifically designed for certain time frames and/or assets. Don't bother looking for optimal results across all tickers and time frames. That's the holy grail, and it doesn't exist. Just use this tab for a general assessment only, and once you find something that looks halfway decent, turn to the Performance tab for fine-tuning. The List of Trades tab shows a list of all your trades arranged in chronological order, where each trade is represented by a pair of orders, the entry order and the exit order. The first trade is listed at the top, and the last trade is listed at the bottom. Trade information is separated into columns. The first column in the top left is trade number. This is an index of the trades beginning with trade number 1. The second column is type. This is the direction of the trade. It will always be either long or short. Signal is the ID assigned to the order programmed to make that trade. When you're programming your strategy, you will find that every order function requires an ID as an argument. The ID is a string and can be whatever you want it to be, but keep in mind that it's helpful if it's descriptive because it shows up here. It's also worth noting that all order functions also contain a comment argument that is optional and left blank by default. This is also a string, and whatever you put here will take priority in the signal column. The date time column is the transaction time in the chart's time zone. Price shows the execution price. Contracts shows how many units were bought or sold at that price. Profit is how much was gained or lost for that trade. Cumulative profit is how much you made compared to your equity. Run up. This one's an interesting metric which shows the maximum possible profit that could have been made for that trade. For example, in a long trade, run up starts from the trade entry to the highest price between your entry and your exit. Drawdown is the opposite of run up, showing the maximum potential loss of that trade. We can see these metrics more clearly in this chart. Here you can see the first trade with its trade number, contracts, entry price, and signal. We can see the trade exited here, the drawdown, run up, profit, and cumulative profit. The cumulative profit is simply the profit divided by the equity, which in this case of our first trade, it will be our initial starting capital of $100,000. If you're a hands-on learner like me and would like to fully understand how these metrics work, then keep an eye out for the attached code at the bottom of the section. You'll be able to drop it on any chart and manually place trades to investigate these metrics further. All you have to do is just download the file, drop it in your Pine editor, and add it to your chart. If you have any issues, just send me a message and I will help you out. In this section, we'll start off by reviewing our understanding of order types. Then, we'll zoom out and take a macro view of the PineScript strategy commands. After we finish brushing up on the what and the where, we will dive straight into the how. Our first task will be building a super simple strategy based on super simple logic. We're going to use this as the core strategy for this section's exercises. From here, we will cover common techniques that you will be able to reuse and come back to over and over again while developing your own strategies. The point of this section and the included coding examples will be to develop a strong understanding of idiomatic programming techniques for strategies, not to build a winning strategy. That being said, don't underestimate the power of a simple strategy. It should be noted that if your strategy becomes complex and difficult to understand, then you will never be able to improve it. I also sincerely hope that you'll be able to use these examples as a reference when you build your own strategies. I have structured them in a way where it will be easy for you to include the logic into your own code. So, feel free to skip around or sit tight and follow along. I'll do my best to keep this interesting. Before we jump into programming different types of orders, we need to understand what are the different types of orders and how do they work in the real world. So the two major types of orders that every trader should know are market orders and pending orders. A market order is the most basic of all the orders. It is meant to be executed immediately. This order is for traders looking to get in or out of a position as fast as possible. If you've ever used a buy-sell button on your trading terminal, you have made a market order. It's important to remember that just because you executed a market order at a certain price doesn't mean it will get filled at that price. So depending on the liquidity of the underlying asset you're trading, you may only get partially filled at your expected rate, and the rest of your position will be executed at the next best price. This is called slippage. It's also important to note that market orders are subject to the bid-ask spread. A market buy executes at the ask price, and a market sell executes at the bid price. Sometimes the difference between the ask and the bid price can be large, which is not a good thing if you intend to use market orders frequently. Every trade will have to recover the cost of the spread just to get back to net zero. Market orders are also commonly referred to as taker orders by exchanges and brokers. Taker orders take away liquidity in a market. When a new order is placed and it matches against another order already on the order book, the maker, the taker in the transaction is charged a taker fee. Some key takeaways of market orders are: market orders do not guarantee a price, but they do guarantee immediate execution. Market orders generally are more expensive due to spread and sometimes commission. Market orders are good for quick trades and liquid assets. Exchanges can refer to market orders as takers because they take liquidity off the order book. This often results in higher fees for the taker. The other major order type is pending orders. These are also known as limit and stop orders. Pending orders allow traders to buy and sell at a future price. This type of order is used to execute a trade if the current market price reaches a predefined level. The order will never execute if the price does not reach this level. So there are four types of pending orders. We have a sell limit, which is an order to sell at a specified price above the current market price. There's a buy limit, which is in order to buy at a specified price below the current market price. A buy stop, which is in order to buy at a specified price above the current market price. And finally, a sell stop, which is in order to sell at a specified price below the current market price. Basically, buy, sell, stop orders are essentially the opposite of buy, sell, limit orders, respectively. Some key takeaways for pending orders are: pending orders guarantee a price, but they do not guarantee execution. An improperly placed pending order can execute immediately. This is just a warning, so be careful when you're placing your pending orders. Pending orders give away your position, as they can be seen on the order books. This may not be good if you are trying to enter a large position stealthily at a certain price, as other traders may see your order and place trades in front of yours, driving the price away from you. Exchanges often refer to pending orders as makers, because these orders make up the order book and provide liquidity for the rest of the market. They are often rewarded with lower fees. Okay, now that we have a fundamental understanding of the basic order types, let's take a bird's eye view of all the strategy commands available to us. Seeing everything like this up front will really help you get a bearing on things before we skydive into the details. We can view the full list of growing strategy commands in the PineScript Language Reference Manual. This manual should be your best friend when scripting in Pine. There are over 45 unique commands for strategies, which I know seems like a lot, but you don't need to know them all by heart. And there's only really a handful which you will be working with for the majority of the time. So when you're in the manual, just type in strategy into the search bar to filter only the unique strategy commands. These commands can be separated into two distinct groups: functions and variables. Strategy functions can be thought of as commands that perform some kind of action. For example, opening an order or closing a position. Strategy variables can contain performance metrics about the strategy. Think of net profit or total closed trades. Another thing about strategy variables is they also contain named constants that can be used for more readable code. Take the variable strategy.long. This is a named constant which is identical to a constant true boolean. The two are interchangeable. Most strategy variables are also included in the strategy tester tab after running a backtest. Strategy functions can be further broken down into two subclasses: order management functions and risk management functions. Order management functions contain all the core functionality in which you are to program order types. Think of market orders, pending orders, entries, exits, take profits, stop losses, and so forth. Risk management functions all start with a strategy.risk prefix and are related to risk metrics. These functions give you increased control to refine your strategy's risk performance, but are mostly unneeded when you program your strategies thoughtfully. In this lecture, I'm going to show you how to convert a study to a strategy and then add some trading logic. Now, we can do this in a few ways, but for all intents and purposes, we're going to start with the standard issue Tradingview RSI indicator. The first step we need to take to convert this indicator to a strategy is to get access to the code. Now, not all public indicators are open source, but Tradingview is our comrade here, so we can access this indicator's source code by adding the indicator to our chart and then clicking here. Pine in there will pop up and show the source code, but right now it's got a big white lock on it, so that means it's read only. But don't worry, we can make a copy of the source code by clicking Make a Copy. Just give it a name and then save it. Now we're ready to make some changes of our own. The strategy we will build is going to be super simple, because we'll be using it more as an educational prop than actual moneymaker. Do not put money on this. And also, don't take anything I say or do as financial advice. I am not a financial advisor and do not want to get sued. Thanks. Now, since the RSI is a momentum-based indicator, our strategy will also be a momentum-based strategy. After the strategy enters its first trade, it will never be flat, meaning it will always have a position open in either a long or short direction. The logic here assumes that the market is binary and is either trading up or trading down. This strategy obviously doesn't take into account sideways markets, but this is supposed to be super simple, remember? The RSI will be the only indicator for the development of this strategy. If you're not familiar with it, you should know that the Relative Strength Index, RSI, was developed over 40 years ago and is a very popular indicator used in technical analysis today. The RSI was designed to indicate whether an asset is overbought or oversold relative to recent price levels. The RSI is calculated using average price gains and losses over a given period of time. The default time period is 14 periods, with values bounded from 0 to 100. An asset is usually considered overbought when the RSI is above 70 and oversold when it's below 30, but you can make those levels whatever you want. Now that you're familiar with our momentum indicator, let's turn this indicator into a strategy so we can backtest it. There's a few common ways we can interpret the values of an RSI for trading. We're going to be using the overbought and oversold thresholds to keep things simple. Our long entry will occur when the RSI is less than the oversold level, and our short entry will occur when the RSI is greater than the overbought level. We will only have one position open in one direction at any one time, so if any additional RSI signals occur in the same direction, they will be ignored. If we get an RSI signal in the opposite direction, the position will be reversed. And by default, our positions will be sized at one contract. So in summary, when our strategy starts, it won't have any positions open. But when the RSI goes below our oversold level, our strategy will open a market position for one contract long. Then when the RSI becomes greater than the overbought level, that position will be reversed by opening two contracts short. When the next long signal comes along, that position will be reversed by opening two contracts long, and this pattern will continue indefinitely. Our position size will always be one contract in the direction of the momentum. Alright, so let's go ahead and convert this study annotation to a strategy annotation. And we'll just replace these words with strategy, and when they turn blue, that means we've done it right. And we can remove this argument, the resolution argument, because it's not valid within the strategy. And if you hover over the strategy words with your mouse, you can see this little mini window pop up that shows you all the arguments. You can also click on it when holding Command if you're on a Mac or Control if you're on a PC. When you do that, a little window will pop up which brings you to the language reference manual. And you can get all the details here and the arguments and other functions and variables and even operators. This is very handy when you're working. So, next up, I want to put in some inputs. For input number 1, I want to be able to control the oversold and overbought levels. So oversold equals an input, which is a function, and we can put in a default value of 30. And the title will be oversold. Do the same thing for overbought. Make sure we change this default value to 70. And change the identifier so it's unique. Otherwise, we'll get an error. Okay, and down here, these are calculations for the RSI, and these are plot functions for the RSI. Now, we don't need to touch any of that. At the very bottom, I'm going to put in the strategy logic. So if the RSI is less than our oversold level, which will be I oversold, drop down, tab it in, then we can use this function called strategy entry. And what this function will do is it will enter in a trade when the if block is true. We just need to give it an ID, and the ID will be whatever you want it to be. It has to be a string. So I'll just say RSI is oversold. Go along. And then the next thing we need is we need to tell the entry function which direction. Do we want to go long or do we want to go short? And we can do that by using this argument, long equals, and then we have the named constant strategy dot long. That's it. We'll do the same thing for the overbought. Make sure that RSI is greater than overbought. Same function. We have to change the ID down here, otherwise they'll conflict with each other. This ID has to be unique. And RSI overbought, go short. And this argument is still the same. It's long. But instead of putting long equals strategy.long, we could put strategy.short for the short named constant. Or this also accepts a Boolean. And false is short. True would be long. And that's it. So let's save that and add that to the chart. Right away, you'll see that the Strategy Tester tab pops up with our overview of our performance and all the performance metrics and the list of trades taken. You'll notice that there's trades on the chart, the entry that we put in, the ID, RSI, oversold, go long, and this +2 is the amount of contracts. -2 for the short position, RSI overbought, go short, and vice versa. And if you look at the RSIs down here, this is the original RSI that we copied from, and this is the RSI that we just added to the chart. And to show that, I can change the short title here, save that again, and it just updated. Now this is RSI strategy. Now you can tell the difference, but they're basically identical. The only difference is this is a study and this is a strategy. So the strategy is actually the one placing the trades for us. And we can confirm that our strategy is working correctly. If we look here, this is the overbought. Well, this is actually the first signal we got here was the overbought, and it entered right here. We had another signal here, but we're only doing one position at any one time for this strategy. And here, it was oversold. It just crossed below the oversold level, and we have an entry to go long. So there you go. That'll be our RSI strategy that we'll be using for the rest of this section. If you couldn't code along, just look in the Resources tab at the end of this section, and you can find the code there. Okay, guys. So real quick, before we actually get into the coding of the examples here, I just want to show you how I've laid out some of the sections in the code. So this here is what you'll be seeing for the rest of this section, and you can download it in the Resources tab so you can actually follow along. But basically the way I laid it out is this is a script, and at the top we have the version number, and then I put in the table of contents so you can quickly go through and search for each example. I have a little legend here, and then the architecture of how each lecture and code example is laid out. So in between these little emojis here, I have the lesson name, and then the example name, and then if there are different ways, different methods of the example, I've labeled them like this. So all you'll need to do is to go through and uncomment something to make it work, and then make sure you comment again before moving on to the next example. Otherwise they'll conflict with each other and you'll get errors. Or you can just cut it and drop it into your own script. And then here I just have some general information about the entire section, like syntax and stuff. You can also pull up this information by using the command click on the actual function that you're using. So at the top this is where it actually starts on line 76, and here I have the strategy annotation, name of the section. It's going to be overlay true, and then I put pyramiding to 1, which means it will only take one trade in one direction. And then here I've actually converted our RSI strategy that we made into a very simple version of the same exact thing. I just got rid of all the extra code. So this is the old RSI strategy here, and you see we have a couple more inputs, the length input and the source input. I got rid of those. Also the calculations, got rid of all of those, and I got rid of the plotting calls. But the strategy is exactly the same, because here I just have I have the length and oversold, overbought levels. That's it. So PineScript has a built-in RSI function that we can use by just typing RSI and putting in the parentheses between it, and you can look at that. So here I separated the go long logic into its own line. So RSI is less than oversold, go long. RSI is greater than overbought, go short. And I'm going to be using these go long, go short identifiers for each example throughout the code. So you know that when I type in go long, it's going to actually mean RSI is less than oversold. And the same thing with go short. And here's the example. This is the same exact strategy. Quick start example number 1. So just to show you, Well, it's already added to the chart. So go short, go long. And then if I bring up the strategy tester here, I can actually change the strategy to the RSI strategy, which we made earlier. And it's exactly the same. It's just changing the names now, but they're identical. And you can look at it here, 41 trades, 53.66, looks good. Okay, and that's how it's going to be. So when I'm going through the examples, this is what I'm going to do. I'm going to uncomment that, otherwise that will conflict with the examples, and I'll be working with them like this. And this is the first example we're going to work with. So in this lecture, I'm going to show you guys how to enter a trade using a market order with either strategy entry or strategy order. And those are the only two ways that you can actually enter an order. So this is the syntax for strategy entry, and this is the syntax for strategy order. They are identical up front, but we will see the differences between two of them. So here I have a market long entry with strategy entry, and I'm going to show you how to go long, how to go short, and I'll do the same thing with the strategy order. Now before we do that, let's just go up here to the top of this script and make sure we uncomment this so it's not conflicting with the rest of our orders. I'll save that, and we should get this little error here. The script must have at least one output function call. So let's uncomment this first method, which is the first method you can use to go long. And basically it's just an if block. So if go long, and then strategy entry, I give an ID of go long, and I'm using this argument as long with the Boolean true. And what that's going to do is whenever we have our long condition, it will send the order, make a market order, and we'll get a long entry. And if you noticed, we only have one trade here. That's because there's pyramiding at 1, and there's only one. We're not going short anywhere, we're just going long. So you can't actually even see it on this chart here in the USD CAD. So if I switch to something that actually doesn't have a lot of data, Filecoin Bitcoin, we can actually see the trade show up in the chart. And it will show you the date here, so you can see where the entry happened. So there's our market entry. And that happened when the RSI was below 30. And I kept this RSI in here. Okay. That's one way to do it. Let's look at the next way. And the next way isn't very much different, but I think it'll be helpful if you guys see them all. So the next way is exactly the same. We're using an if block, strategy entry, same ID, and then instead of using the true here, we're using this named constant, strategy long, which is identical to true. And we'll see that. Now you can't use strategy long as a replacement for true, per se, but you can use true as a replacement for strategy long, if that makes sense. And you see the same exact order popping up here. And method number 3, this is the third way you can do this. Let me uncomment that. Now we're not using an if block, and the strategy entry has an argument called when. And this is basically like the if block, but it's built into the function. So when equals go long, which is like if go long, then enter the trade. And this will do the same thing. So I'm saving, and look. And that's it. Those are the 3 methods. You can choose whatever one you want. Okay? And I put this warning in here. You can see this. If you try to send more than one identical strategy entry order with an identical ID at the same time, neither will work. And what that means is if you go ahead and uncomment this one and this one and try to run them at the same time, because they have the same IDs, they'll just cancel each other out. And that doesn't seem like the way it should work, but that's just how it works. So same thing for short entries, and these are just pretty much identical to the way you would go long. we have the if block, and this time it's not if go long, it's if go short, and I used false to go short here. And I could show that, but I think you guys understand. If you want, you can go and play around with the code here and see for yourself. Method number 2, exactly the same, except we're using the name constant strategy short. And for method 3, what do you know? It's the same exact thing. We're using the when argument. And when our condition is true, which is go short. Whenever the RSI is above 70. And as it turns out, it's not above 70 anywhere on this chart. I just checked. I won't suffer you guys that. Maybe on Zcash. And we can look at here in the strategy tester. So somewhere in 2018, we had one short entry. Okay. Get rid of that. Okay, now let's look at how to do this with strategy order. And this will be the same exact thing. So method 1, if go long, we're going to use the if block here, and instead of strategy entry, it's strategy order. Same exact argument, ID, we're using go long, and we're using the long argument, equals true. But you notice now we have more than one entry. We have 2 here, and a bunch here, 1 here. Okay? It's a little bit different than the strategy entry. And I'll talk about that in a second. But the syntax is exactly the same. Same thing with method 2. You can do it this way. We can use a named constant. And the same thing with method 3. We have the when argument. So strategy entry and strategy order are identical when it comes to syntax, but they make trades a little bit differently. And if you want to do a short order, same exact thing. So just to be comprehensive, I will briefly show you guys these, but I don't want to be too redundant where it gets boring. So if go short, long equals false, and strategy short, named constant. These are just 3 methods to go short. It's 3 methods. You can use whatever one you want. And I'll explain the differences in the next lecture. In the last lecture, I showed you guys how to use the strategy entry and strategy order functions to make market orders. If you're paying attention, you might have noticed that the syntax was exactly the same, but they made orders a little bit differently. So in this lecture, I'm going to explain to you the differences between the two and which one you should use. So the major differences here with strategy entry is affected by the pyramiding setting in the strategy's properties. And you can find that setting either in the strategy annotation at the top of your script, which is up here. Hold past it here. So here I have this argument, pyramiding was 1, and it's optional, but the default is always 1. Or you can find the setting here in the settings, and it's in the properties tab, and we have here pyramiding. And what pyramiding is, it's just a way to stack on orders in the same direction. So if pyramiding is 1, you only can have 1 order going long. If it's 2, you'll have the next time you get a signal, another order will open up, and so forth. But strategy order is not affected by that setting at all, so every time you get a signal, it will send an order, and it'll make a trade. The second difference is strategy entry is affected by the strategy risk allow entry in function. And this is a risk setting that allows you to set either to go long or to go short. Third thing is strategy entry can actually reverse your positions. With strategy order, you need to do this manually. But in this case, with strategy entry, if I'm long and then I put strategy go short, it'll automatically change the direction of the trade and the position will go short. So, to show you guys some examples here, let me just show you pyramiding. Okay, so here we have a strategy entry order where we're just going long, and we're using this method here where when equals go long. So whenever the RSI is below 30, when we get that signal, we're going to go long. If I save this, we get this signal up here, go long. Now, if I go into the settings and I go and change pyramiding, we should get another order, and another, and so forth. If we do this with strategy order, all these trades that we see here will automatically happen, no matter what the pyramiding setting. So same thing, but now look, because we're getting signals all down here. And the pyramiding is at 1, it doesn't matter. So in the second example, we are looking at the strategy risk allow entry in function and its effect on strategy order and strategy entry. If we look at the definition of this function here in the PineScript reference manual, we can see that the purpose of this rule is to forbid short entries. Only long entries will be placed. There's a little typo here. The rule affects the following function entry. So that's strategy entry, and this definition here is actually incorrect because you can set the rule to forbid long entries as well. So here we have this named constant, which is strategy direction all, and there's two other ones. There's strategy direction long, strategy direction short. And the only place these named constants work is in this function. So by default, this is what it's set at. You don't need to use that. And if we just have a regular order here, strategy entry, this entry is going to go long on every single candle. And let me just show you. Well, pyramiding is set to 1, so it's only going to go long on one candle, right? Now, if I set strategy risk allow entry in to long, it's going to not show any difference here because it's only allowing it to go long. We're going long. But if I change this to short, then this entry won't even happen because the strategy now is only allowing short entries. If I change this to short, we'll see that trade pop up like so. And I guess you can't have these both there. There we go. So here's a trade, it pops up. Now with strategy order, there's no effect here. We get all these long entries when the strategy direction is set to only short. But like I said, that only affects the strategy entry function. So when you're using strategy orders, you got to be very specific because none of these risk functions, none of these rules have any effect. The third example we're going to look at is position reversals. So this also only affects the strategy entry function. And here I have two strategy entry functions just reversing each other. So one's going to go long and the other one is going to go short, both according to the way we set up our strategy with the RSI. And I need to change charts here because this RSI only goes long because it only goes below 30. So I'm going to change it to something with a little more data, some silver. And now we can see a couple trades here. So this one is going +2 contracts and then it's being reversed, -2 contracts, but it's always one contract in the direction it's going in. So really it's short one contract here and it's long one contract here. It's reversing the position. And you can see here in the actual list of trades under the strategy tester, contracts is always 1. We never have more than 1. And that's just the default with Tradingview. If you want to change the order size, you can do it here. You see that change being reflected here. And you don't have to use just contracts. You can use a monetary value or a percentage of your equity. But if we do the same thing with the strategy order, what do you think is going to happen? Been following along, I think you know by now that we're not going to get the same effect. In fact, we get a much different effect. They're not reversing each other, and we're also getting the strategy order on every single signal we get. Now we can change the frequency of these signals by adjusting our strategy, but we won't get into that yet. So our positions aren't getting reversed with strategy order. Now if you go ahead and you run strategy entry with strategy order, the strategy entry function will actually reverse the strategy orders. So here we have, if we get a short signal, then we send a strategy order to go short. And we actually we can use this argument called QTY, which is short for quantity. And we are actually going to send 10 contracts to go short when we get a short signal. And then when we get a long signal, we're going to use the strategy entry function, and we're going to send 10 contracts to go long. Now this entry function will reverse this order function. Now if you look, you notice the go long is actually 250 contracts. This is because we're getting many more orders. We're getting 10 here, 10 here, 10 here. With the strategy order function, every time it gets a signal, it goes short by 10 contracts. So that accumulates, and then when we get the entry function, it's actually reversing everything that was short, and then it's just going 10 contracts long. We can see that in the performance summary. If we look at the number of long trades here, number of open trades, just one long. It doesn't show the amount of contracts. It does right here. Max contracts held 10. 10 long. Max contracts held for short 700. So at some point we had a long entry trade of 710. So which one should you use? I would start with strategy entry, and when your strategy becomes more complex, move to strategy order. So in this lecture, I want to go over how to exit a trade using a market order. And to do that, we're going to use two functions. We have the strategy close and the strategy close all. This is the only way we can exit an order with a market order. So we may not always want to flip between short and long with our orders, and this is where we will use these functions. So the strategy close function closes a particular entry trade with fully or partially with a market order. Strategy close all function closes all positions with a market order. And these functions don't do anything if there's no orders, there's no open orders. So the first example here, market exit a position spanned from a specific ID. And we're going to use strategy.close for this. So I have a basic entry order for a long position when go long, and you can see it up here, the trades coming in, go long 1, and this just closes that specific ID. The ID is go long. So I have strategy.close, and whenever the short signal is triggered, it will close that position. And we can see it, go long, close entry, order, go long. Pretty basic. And we can do the same thing for short, or for the order, strategy.order. It'll close the order entries. So let me save that. And here, the strategy order function, as you know, operates a little bit differently. It's sending trades for every single signal it receives for each bar, but the strategy close function is market closing the entire position. See here we have 1 1 1 1 1 1 1 times 11, and then this one close function that comes when we get one short signal. It closes all those entries. Now, if we have a bunch of orders with different IDs, we can actually use the strategy.closeAll to market order close all of them at the same time. We don't have to actually use the ID of that order. If we just want to go flat at any point in time, we can use this. So here I have 4 different entries and orders being sent out and making trades. They're all going long when the strategy is going long. And I gave them different IDs. Go long entry 1, go long entry 2, go long order 1, and go long order 2. So we're going to get a bunch of orders, and then this strategy.closeAll will close them all when there's a short signal. We can see here the text on the screen now, but these are all the orders being generated. You can kind of see the difference between them. Go long order 2, go long order 1, go long entry 1, and then 1 here. 1 position to close all the orders on a short signal. Now the main difference is for the strategy close, you need the ID of the order because you want to be specific about which order you're closing. And you don't need to use this when argument. It's optional. You could put it under an if block if you'd like. And this one here, you don't need the ID argument because there is no ID. You're just closing all the orders. And I use the when argument here. I could have put it in an if block if I wanted to. Another thing you can do is you can partially market exit a position spawned from a specific ID. So using the strategy.close function with an ID, you can actually use the quantity argument to partially close a position. So I'm going to generate some entries here. Let me make sure this isn't on. So now I'm generating some long entries when we're getting a long signal from our RSI strategy. And we're only getting 1 entry because pyramiding is 1, right? And what I want to do here is I'm going to close all orders spawned from this ID by 1 unit. Now since we're getting 1 entry, the default quantity of 1 contract, this is just going to close this order. But since pyramiding is 1, more orders will pop up, and those preceding orders will be closed every time there is a short signal. Now we can really see this work when we change the order size. So now I want to change this go long order to an order size of 2 or 3. So here we have two units going long, and then we have a short signal and only 1 unit is being taken off. Another short signal pops up and we're losing another unit. And then we go long for 2 again, and we can change this, and you get the point, right? Go long for 9, -1, and then this is a bunch of exits around the same signal, all closing. Actually, that's a bunch of signals, right? There's like 3 or 4 there. There's got to be 4 because we got 4 exits. They're just barely over the 70 mark. So that's a way to partially close a position. Another method is, with the same example, we can actually use a percentage close. And so instead of using the quantity argument, we can use quantity percent argument, and this does the same thing, but it does it as a percentage of your equity. So you can't really see the effect of this until you're over, well, we got 1 unit here, so I got to put at least 10 or 20. Let's see. So I got 5. 10 is still going to be 10%, is going to be 1. So at some point, this close entry should shift to 2. Right there. So at 20, we're getting 10%, which is 2. And below that, it doesn't round up. It looks like it rounds down. So we're getting 1, which is 10%. It's taking a second to load. So that's 10% of 30. We're exiting for 3. Now, if you use both of these arguments here, where I have quantity 1 and quantity percent equals 10, the quantity will take priority over quantity percent. The thing about this is if you go in and you look at the documents, it actually says the opposite. Down here, we look at quantity percent, an optional parameter, defines the percentage of entered contracts to exit a trade with. When its value is not nan, its priority is higher than that of the quantity parameter. So that's not true. Because here, I have quantity and quantity percent. Neither of them are nan. And by what the docs just said, this quantity percent should take priority over this quantity 1. So let's see if that happens. Save this, add it to the chart. And let's just bring it back up to 20 contracts, and we should get a 2 for the close, a -2. Because that would be 10%, right? And we're not getting the 10% percentage. We're still getting 1 contract. But didn't the docs just say something else? They did. Unless I'm reading that wrong. So, be careful when you're reading. Always test what you read. Question everything, right? Let's look at how to place a limit entry order. So here, we have 2 functions. You should be very familiar with these functions by now, strategy entry and strategy order. We can use these to place limit orders as well. And to do that, we just use the limit argument and put in our limit price. For a buy limit, we want to set the limit price lower than the current price, and the opposite for a sell limit. So here I have a limit entry using the strategy entry, and I'm doing a buy limit. This is the ID called buy limit. Long, it's going to go long, and the limit price is going to be set at the low. And the low, that's going to be when the signal occurs, which is according to when this function is activated, and that's when it's equal to go long. And we know that go long is when the RSI is lower than 30, and the first occurrence of that is here, or here. My mistake. 25.56, and the low is right there. And we can see that on the next candle, that limit is being hit. And then if we go forward, this function right here is the opposite. It's just going short, and it's putting the limit at the high. So let's move to the next trade on this chart, if there is one. Here we go, sell limit up here. And we can see that the signal occurred here. The RSI is over 70, and the high is here, and that's exactly where this sell limit entry was triggered, and the trade enters here. The pyramiding and order size works just the same. Here we got another signal, and the entry was put at the high of this, and on the next bar it opened up and it triggered it. And as you know, we can do the same exact thing with strategy order. Now let's look at how to place a stop entry order. And we're going to use the same 2 functions we've been using, strategy entry and strategy order. The only difference is now we're going to be using the argument stop. For limit orders, we use limit, and for stop orders, we use stop. It's pretty straightforward, right? So for a buy stop, we want the price to be higher than the current price, and for the sell stop, we want it to be lower. And here we're going to use the strategy entry functions. The ID here is buy stop, and we're going to go long when we get a long signal when the RSI is greater than 70, and we're going to place our stop at the high of where the signal occurred. And then we're going to reverse that position by just doing the opposite function. For a sell stop, we're going to go short when we get the short signal on the RSI, and we're going to place the stop at the low of the bar that receives this signal. So here we have the RSI is over 70. This is where we get the first signal, and we get the stop set at the high. Oh, sorry, it's a sell stop. So it's set at the low. And it's not triggered. The next one, the next bar, the strategy recalculates, and we have another signal. So for that entry, it's modified, and the stop is moved to the low of this. It's not triggered. This one does the same thing. We have another, the RSI is over 70, so we get another signal, and the stop is modified again. And then finally, on the next bar, it's actually triggered. And since there's no pyramiding, we don't get any more entries until there's an opposite trade over here. And on this one, we get a bunch of signals. It looks like 24, and the stop is being set at the high. But look, it's going down, so none of these are triggering the high till this one signals, and then on the next bar, this one hits the high. Now let's look at the strategy order. Same exact setup, same exact syntax, same exact order here, but up here, hold on a second. I love when that happens. Up here, we have two orders. We have the same exact order we had before from the strategy entry, with the sell stop being hit at the low of this bar on this bar. We got the signal here, and then here it was triggered. And notice that this bar here is entering right here. Well, this is the low of this bar, because we got another signal right here. On this RSI, it's still over 70. It's at 74.19. That also, since pyramiding has no effect on strategy order, that also sent a order at the low of this, a sell stop order. This next bar obviously didn't trigger that, and it didn't modify the sell stop at all because it was below 70. Then finally this bar came down and hit the sell stop. And that's that. Alright, in this video, I'm going to show you guys a couple techniques to visualize your pending orders. Now, if you're a visual learner like me, this is very helpful. You get to see where your pending orders are placed, and it just makes trading and building your strategy that much easier. So, you might be trying to do this yourself already, and you might have started off with a simple example like this, where you have the limit price. Say, for example, it's set to the low, and then you have an entry order that goes long when your buy condition is set to buy, and then you have a strategy close position. So when, for example, this one is when we're gonna go short, and this is still set up to the RSI strategy we have. So go long is when we're below 30, and go short is when we're above 70. And basically, I'm just going to plot the limit price, and this obviously. This is on the chart right now, and this doesn't really work because it plots the limit price on every single bar, and it's just plotting the low. So it's not actually plotting the limit price. It plots the limit price once, but the rest of the times it's incorrect because it's changing. It's being redefined on each bar. So you can see here, well, here is where we actually had the limit price set. This one too is redefined here. The actual limit price entry is below 30, and that's where it's being triggered, at the low. But the blue line is supposed to represent the limit price, and it obviously doesn't. So let's look at an example of how to do that correctly. So I built out this example here, and it only works for strategies that don't have pyramiding. And it's only for long-only strategies, but you can reverse it pretty easily and make it to work for short and long. But in this case, we're going to keep it simple. So what I'm doing differently here is I'm actually initializing this limit price identifier as a variable. So now, in order for this identifier to be changed, I need to actually change it in the code again. Whereas before, every time the code ran through, it would redefine it as low. Now here, once it's set to NA, it will always be set to NA. So if I set this to, for example, low, it would be low on the first bar. So the very first bar in this data set would be initialized into this identifier, and if I didn't reassign another variable into this identifier for the rest of the strategy, for the rest of the program, it would stay at that first bar low. That's the difference between this variable initialization and this without the variable initialization. This variable gets initialized every single bar. So every time there's a new low, it gets initialized, re-initialized. So here, I'm just going to set it to NA on the first bar. So then, when we have a long condition, and this is the same thing, I'm just using the if block instead of the when argument. So when we get this by condition, and when our strategy position size is less than or equal to 0, so if we're flat, if we have no open positions, or if we're actively short, which in this case we don't have any short positions, then we are going to redefine the limit price identifier with the lower variable of that bar at that instance. And then we're going to send the order out with that limit price here. So that low will be sent out. And then when we get a short signal, we're just going to close this specific entry. And we're going to plot the limit price. So I'll save that. Looks like I got an error over here. Got to make sure I had that active. Okay. So now you see something a little more different. And here we can see on this bar, the RSI is below 30. It's the first bar. The limit price becomes active. The limit entry order becomes active. And it starts to plot the actual limit price. But what happens here? In this next bar, we're still under 30, which means we got another signal. Because our go long signal is when the RSI is less than 30. So every time this RSI is going to be less than 30, we'll get another signal. So we got another signal here, and it goes through again. We still haven't opened an order yet, so this is still valid. And the limit price identifier is reassigned again to this next bar low. And we see that. Then this bar comes, and it is 31.18. So nothing happens. It skips by all this code, and it still plots the last low, which is here. Same here, same here, same here, and so forth until one of the lows of the candle hits that limit price and triggers it. And now our pending order just stays there until it actually closes. Actually, it stays there indefinitely. So the example now works a little bit better. We see our pending order, but it's not perfect, right? And we can't use pyramiding either. So we'd like to see maybe an example where this limit price, this low hits the limit price, and then this pending order disappears. And maybe even something with pending orders. And I have a way to do that. In the next example, added in another variable here. So this one isn't actually that much more complicated. So here, we're doing the same thing. We're initializing the limit price variable as NA. And just ignore this line right now. We're doing the same exact go long strategy. I got rid of the strategy position size condition. So pyramiding will work in this case. And now we're doing the same thing. We're reassigning the low to the limit price every time this is valid condition, every time this is true. Sending out the same order and sending out the same exact close. And we're plotting the same thing. The only difference is this little piece of code here, where we have if the low is less than or equal to the limit price, then reassign the limit price to NA. And what that does is when this low crosses over the limit price, the green line here, then we are going to change that variable to NA. And as long as we don't have any other go long signal, it's going to come down here and it's going to plot NA, and if we plot NA, nothing will show up. So this green line will essentially just disappear. Save that, and we get a nice pending order. That works. Okay, let's look at some visual examples that you can actually work with and get a better feel with pending orders. So in this example, right here, we're just going to be visualizing some limit orders. And what I've done is I made two inputs, a sell limit price and a buy limit price. One's at 30 and one's at 10. And then I have limit orders. They're always going to be active. They're always going to be set in every single bar at those prices at 30 and 10. One's going to be long, one's going to be short, and we're going to plot those prices. So the way we have our strategy set up right now, actually it should show up perfectly fine because we are on a specific security here that doesn't really fluctuate too much between 30 and 10. There we go. So if you have something that will fluctuate a bunch between these two variables, then we'll get a bunch of orders, and that's not going to be good. I think the limit for the amount of orders you can take is 3,000. So sometimes you'll get an error and it won't compile. It's because of that. But we're using strategy entry here too, so we're actually all set. But now you can see the sell limit up here, and you can see the buy limit down here, this green line. And now you can play with these. You can go into the settings, go to inputs, and change the I sell limit price. And you'll see this red line move, and you'll see the sell limit move. Do the same thing with the buy limit price, and you can see the buy limits coming. Now you can get a feel for how these things work. And you can do the same thing with this last example I have at the bottom. It's just for stop limits. So it's set up exactly the same way, except we're using stop orders. And this is also just another example for you to come in and play with to get a feel of how stop orders work. Okay, so in this video I'm going to go over how to cancel a pending order. There are two functions to do this. There's strategy.cancel and strategy.cancel all. This is similar to the strategy.close and close all functions, except this is for orders that haven't gone through yet. They're still sitting on the books. So that's mostly limit orders and stop orders that haven't been triggered, but you can also cancel an entry order, a market order, but you have to cancel it before it actually goes on to the market. So if I put down an entry, strategy.entry, I'd have to put down strategy cancel right after it in the script before another script is executed, before another bar comes. It's not something you do often, but you do have that option. So in this example, I'm going to show you guys how to cancel a buy stop, and it should be pretty straightforward. So here I have an input that's at the 20 level, and it's for the buy stop price, and I'm using a buy entry, a strategy entry here for a buy stop. We're going long at the buy stop price. And then I'm just plotting the buy stop price here. And you can see that logic being played out right here. It's a buy stop at 20, it's being plotted at 20, and then it gets hit here. And it's active all the way, basically from the beginning. Because this order's running on every single bar. Now, if I put on pyramiding, it's going to continue making orders, because that's always going to be active. Every single bar is going to be active. Now what if I want to cancel that after, for example, after one order comes through, say I don't want any more pending orders. So what I can do here is use this built-in keyword called strategy.positionSize, and this just tells me the position size I have, and if it's greater than 0 it means I'm long, and if it's less than 0 it means I'm short. And the numbers are representative of how many contracts you have in that direction. So here it's just showing if I'm long. If it's 0, then it means you have no positions open. So here I'm looking, if I'm long, then I want to use this strategy cancel, and I need to use the ID of the order that I'm canceling. So I'm going to cancel this entry order, and then I'm going to reset the buy stop price to NA, so it won't plot anymore. And then I'm going to still continue to plot it. So save that, and we're getting the same exact thing, except the plot line is no longer plotting because it's NA. And to verify, can pyramid orders, and look, we don't have any more orders coming in because they've all been canceled. So that's one way to do that. Of course, you could use strategy cancel all for that too. It's not much different, except it cancels any other pending orders you would have, and you don't need to use the ID. Same thing. The next example I want to show you guys is making sure you get the order of operations here correct. So what if I did the same exact thing, except I put the cancel, or I put the entry order after the cancel. So I had the buy price at 20 again, and I have the same logic for when I have one contract long over 0. I'm going to cancel it, but instead of having the order up here like I did in the last example, I now have it after this block. And this will do what seems to be the same thing. It seems to work, but when I go to pyramid my orders, something strange happens. Our orders are supposed to be canceled, but now they're triggering every single time. And they're not even triggering at the limit price. They're triggering at the open of each one of these candles. So, two things are happening here. One is the strategy cancel function is being sent out before the strategy entry function. So this isn't going to cancel this until the next bar over. And it's not going to cancel this entry function, it's going to cancel the next one that gets sent out. So it's going to miss one entry function. Beyond that, the second thing is this entry function isn't even going to send a buy stop order, because here we're resetting the buy stop price to NA, and that's being sent to this, and when the stop is NA and limit is NA, this turns into a market order. That's why each one of these is being opened at the open. Okay, check it out. We are going to talk about how to place a take profit. Now, this is probably something a lot of you want to know how to do, so that's why I'm covering it. And if you don't know what a take profit is, I have a definition right here. A take profit is a type of pending order that specifies the exact price at which to close out an open position for a profit. If the market price does not reach the TP price, the take profit order does not get filled. Now, this is a lot like a limit order. We can place the take profit orders by using the stop and the limit arguments with strategy exit or strategy order. These are the two ways we make a take profit. And the strategy exit function is maybe not one you've seen yet, but this is what it looks like. This is the syntax at least, and you can look it up in the reference manual if you'd like. Let's take a look. And there's a bunch of information here on what exactly this is and all the different things you can do with it. So I won't bother you with that, but basically this is a command to exit either a specific entry or a whole market position. And we're going to be using that as a way to take profit. So in this example number 1 here, we're going to be placing a TP based on a price level that we set. And that price level is going to be a percentage away from our entry price. So I have an input here. By default, it's set to 10. And if you notice here, there's a little division by 100. This turns that 10 into a percentage, 0.10, which will end up being our take profit percentage. Now, it doesn't happen automatically. We need to calculate that. And the way we calculate that is down here on this line. And what we do is we use this built-in variable called strategy.position_average_price, which is the average entry price of your current market position. If the market position is flat, then a NaN is returned. So no number is returned if you have no open order. If you have one open order, then it will give you the exact price that you entered at it. Now, if you're pyramiding, if you have 2 orders, then it will give you the average between those 2 orders. So if you're looking for, it depends on what exact percentage of take profit you're looking at. If you're looking to a percentage based off every order, then this won't work. But if you want 10% and you're fine with the average of your entry prices, then this will work. So just keep that in mind. This is just the average price of all of your entries. And here's a calculation. We're taking that average price, we're multiplying it by 1 plus our percentage. So in this case, it's 1.1 times the entry price. So it should be a little bit higher. Now, we're still going to plot that. We're going to plot this TP level. And when we don't have an open position, because it returns NaN, nothing will plot. So that'll look like a really nice line. And I've made it green too for take profit. And the style is important as well. The line break style. Because if it's something else, if it's the default, you'll get a line in between the NaN points, and it just won't look good. So for our entry, in this example, we're using a very simple strategy.entry. It's going to be a long entry, and it's going to go long when our strategy goes long. The strategy itself doesn't matter, but we are using this strategy here, the crossover, simple SMA crossover. So we're going long when the fast SMA crosses over the slow SMA. And the fast SMA is orange and the slow SMA is purple. If we look at the chart, we can see that here. So when the fast SMA, which is orange, crosses over here, the purple one, and that would be a long entry. And we'll see that. So method number 1. This is the simplest method, and I would recommend to use this one. Don't mess around with anything else if you don't have to. So we're using the strategy exit, and in order to use this function correctly, you need to give this function an ID. This ID is for this specific function. You can make it whatever you want, but this will show up in the strategy tester tab and on the chart as exactly what exited that entry. And then you need to tell it from what entry are you exiting. And that's the ID of the entry order that you want to exit from. And that's this, go long, go long. And then we give it a price. We don't have to do this. This is optional, but this is how we make it take profit. It's going to be a limit price. And we're making that limit equal to the TP level, which is here. It's the one we calculated. Is the 1.1. It's 10% higher than our entry price, right? And that's going to be the limit price for our strategy exit. So let's load that up, and we'll see that in action. And here we go. Here we have a crossover, fast SMA over the slow SMA. We had an entry, and then 10%, we have a take profit that's hit. And the green line shows the take profit, and then here got hit by this bar. And we can verify this is 10% by using shift and just clicking, and we get 10% here. And that's 10% from the price. It's not 10% of your position that you're in based off of your equity. And here as well, and you get the point. Now, let's look at method number 2. So this is a bit more complex. Don't use this if you don't have to. But I want to show you all the ways you can do this. Because if you're working with someone else's code, or if you need to do it a different way, you'll know. So here I'm using the keyword strategy position size greater than 0. So when we are in a long position, then I want this to come into effect. This is a strategy.order. You can also use this function to exit a position. The way we do that is we give it its own ID, because that's required with this function. It can be whatever you want. It does not have to match the entry function, like this exit. I'm just calling it TP, and then this is important. You have to make this go short, the opposite of the function, the position, the opposite of the position that you're going in, right? And we're setting the price, the limit price. So this is actually like a limit order, and it's going to be at our TP level. So we're just setting a sell limit, basically, which will act as a take profit for us. The important thing to remember is that by default, this will only sell a quantity of 1. Now this works for us because by default, we only enter with this function a quantity of 1. So let's see. Let's just make sure this works. Save it, load it up, and we have the same exact thing. Long 1, TP1. Now what if I change this entry to have a quantity of 2? Well, you see we went long here, and then here we still took a profit, but we did it in 2 bars, not just 1. We did it in this bar, and then that entry was still there because we still had a position size greater than 0, and then we took another profit on the next bar. Now that's something to be aware of. You probably don't want that. You probably want to close out a whole position. But if you don't, you know that you can do it differently. So in order to do this, you need to make sure these orders are matched up. This is why this is a little more complex. And there we go. That's how it works that way. Another way to do this method in a similar fashion, this is why I call this 2A. I'm going to call this one 2B. And the reason why it's similar is because it's using the same exact logic, with the same order function, but I'm using this keyword here, this variable, built-in variable, which is the position entry name. And that's the name of the order that initially opened the current market position. And I put here, is that order equal to this string go long, which is the name of the order that opened the market position. If that's true, we're doing the same exact thing. We're sending this TP, and it works just the same as this. Remember though, this is also a complex way to do this, but there is many ways to skin a cat. Method number 3. This way is even more complex, but bear with me. So here, if you look at the way we're getting out, we're actually using a strategy entry function. Don't do this if you don't have to. I don't know when you would have to do this, but you can. So in an event where I want to use this, I would have to use the strategy risk allow entry in function with the named constant strategy direction long. So we're only taking long direction orders, and then I need to check if we're actually in a position. And when I do that, I can use this, which normally would send a short order. We would be going short at this limit price. But in this case, it's just going to close the position because we can't, short orders aren't allowed. And this works. Same exact thing. But I don't know, I've never been in a situation where I've actually used that. I just wanted to show you guys. And finally, the last way, this is the incorrect way, and I'm going to show you why it's incorrect, but it still works. So here we can actually check our TP by checking the high of the bar, of the current bar and seeing if it's greater than or equal to our TP level. And when that's true, we're going to send out a strategy close order for that specific order, which is go long. This entry here. So we're going to be like, hey, close this as soon as that bar goes past the TP level. And the reason why this is incorrect is because this is a market order. All these other methods were limit orders. So with a market order, it's going to see this. It's going to see this position, this signal here, and it's going to be true, but not until the next bar will actually close the position. And it won't close it at the level, the TP level. It will close it at the open of the next bar. And that's the way the broker emulator works, which I have another section on to explain that in greater detail. I won't get into it now, so I would check out that section. But you can see here, we had a TP right here, which was registered, but it doesn't actually get filled until the next bar and the open of it too. So your TPs are very inefficient because you're using market orders. So don't use that method, but you can. The second example I want to show you guys for placing a TP is using ticks. Now a tick is the minimum amount that a price point can move on any one chart. It's different for every asset that you're trading. So to help us, I have enabled this, which will plot the minimum tick on the chart so we can actually see the size of the minimum tick. And this is just a keyword built into PineScript called SimInfo, which is symbol info min tick. And there's a couple other variables you can get from SimInfo. It's worth to check out. Now let me get rid of all this stuff in here. Now we're going to be using, instead of a percentage take profit, we're going to be using a tick take profit. And here I have an input. The default level is 1,000 ticks away from our entry price. And our TP level will be similar to what we use for the percentage take profit. I'm going to be using the average price keyword, and it's going to be added to the ticks times the SimInfo min tick. That's important because if I'm just using the average price plus 1,000, then we're going to get something that's way off. For example, this is 15 entered at 16 here, plus 1,000 is 1,016. That's not where you want your take profit, right? So you need to make sure you multiply it by this in certain cases. And I'm going to be plotting the TP level just like we did before, along with the SimInfo min tick, and we're doing the same exact entry here. Go long when go long. So for the first method, we've got the simple method, the method that you should use. And we're using the strategy.exit function. Same thing, we're giving it an ID specific to this function, this exit function, and then we're going to give it a from entry argument, which is going to be from this entry. These have to match up, otherwise this exit won't do anything. And instead of using the limit argument, we're going to be using this other argument, which is optional, called profit. We set profit equal to ITP ticks. Now if you notice, we're not using TP level. You can actually put in the ticks away from the amount of ticks that you want, and it will automatically be converted in this function. This is what makes this really nice. You don't have to do this math here. So let me save that. And let's see where 1,000 ticks puts us. Okay, so we have, well, the minimum tick, if you look in the data window, min tick helper is, well, it looks like 0.0, a lot of 0, 0. So it's very small. So times 1,000, it doesn't look like it would move the price much. So we actually we'll need to change this to maybe 10,000. And let's see where that puts us. Okay, not anywhere. Let's just switch it up to the euro. It's D. And our minimum tick is going to be different. It's a little bigger here. So where are the entries? I don't see any entries. We're getting trades. The last trade was in 2008. So somewhere along the way, we got stuck. Now bring this back down to 1,000, and it should be okay. Well, we're getting more trades. Last trade was in 2011. Alright, this works. Put her up on the monthly chart. Right. Okay, check it out. Let's move these ticks a little bit. Watch that green bar tick up. So this is the take profit here. And you can see the profit being taken here. I prefer to actually work in percentages because it's a little easier to manage. But some people prefer to work in ticks. If you trade Forex a lot, the pips, percentage in points. Here's a good looking example right here. Okay. So here we have your ticks from your entry. I put 1,200, and you can see it almost right there. It's 1,190. There's 10 off, but it's 1,200 ticks away, right? Take profit in ticks. So that is the longest example on the simplest example. So let's move on to the next example. Change that to 1,200 so we get this same thing to pop up next time. And let's show you method number 2. And method number 2 is similar, but more complex. And we're looking for a position size that's greater than 0. So when we're long, we're going to be using the order function. We're going to give this a required ID, call it whatever you want. And this order is going to be false. And we're using this limit argument. And we're setting that limit argument to our TP level. This is the one we calculated right here. So that's the major difference between the strategy exit using the profit argument and the order. Here, we actually had to set the limit to the calculated ticks away. We had to calculate the ticks, the TP level. And we have to make sure that we're going the opposite direction to make sure we're exiting. And we have to make sure that we're exiting the same quantity amount. And by default, it's one on here and one on here. So this will work. Let's see. Let's verify. We got the same thing. Let's look at method 3. Similar here. We're using the strategy entry function. And we're just using the TP level here. We're making sure that we're only going long, and we're using the entry function. So instead of reversing, it will just close. And we're doing a short entry at the TP level when we have an order greater than 1. We're not using the ticks here. We're using the calculated ticks. We're not using the actual ticks we put in as an input. We're using the TP level, which is our calculation of ticks away from the price. And method 4 is exactly the same as the first example, using the market order to exit, but we're checking if our high is greater than our TP level. And this does the same thing as we saw in the first example. doesn't close the order until the next bar after it hits the TP level, and it does it at the open. And that's how you set a TP. Alright, in this lecture I'm going to show you guys how to place a stop loss. This is going to be very similar to the last lecture where we learned how to place a take profit. So here we're going to be using some similar syntax, and I'm going to be using the stop loss percentage as an input with a default value of 10%, and I'm going to be using that input into this calculation here that will calculate the stop loss level. And the stop loss level is going to use the average price keyword, which will show us the average price of our entry. And if we have one entry, then it will show us the exact price because there's nothing to average. And it will just take the 90%, which is 1 minus 10, our default value of 10, and that will give us 10% below our entry, which will be our stop loss. Now, I should note that the strategy.entry has an argument in it called stop. That is not a stop loss. That is for buy and sell stops. So don't make that mistake like I did a bunch of times, thinking I was placing a stop there. The way to place a stop is using the strategy exit as your simplest method, or you can use strategy.order. Now I'll show you guys a way to do it with strategy entry, but the stop argument is not per se a stop loss. So without further ado, let's get into it. And we have the stop loss level being plotted here, and we have our entry going long when we have a long signal. So here we have a long signal when the orange is crossing over the purple, and we're going long. And right now there's no methods set up, no stop loss set up, but we are plotting the stop loss line, which is exactly 10% below our entry. Get that in view here, and you can sort of see that 9.97. Okay, anyways, method number 1, strategy.exit. This is the method you should use. So we're using an ID for this, and it's going to be stop loss. It can be whatever you want. That won't make a difference. And this is going to be from the entry, from the go long entry. This is where we're stopping from. And the difference between the take profit and the stop is now we're using this argument stop and placing the stop loss level there. So now our stop will be underneath. Okay, so here we go. We're going long, and we don't have any take profit or anything else, so it's just coming down, and we're getting stopped out at our level. And if you look closely at the bar, we get stopped out exactly at where the bar is, right there. And that's how that works. Pretty straightforward, right? Now that's for a long entry. So if I was going short, we'd have to put the stop loss level somewhere else. So here I'm going to go short, and I'm going to do it on the same signal. When we have the go long signal, remember it's just a signal. We're not actually going long at this point. So when we get that signal, send a short order instead. And we can still call it go long. It doesn't matter. I'm going to keep it that way because I'm still going to use this same exact method. From entry, go long. Hopefully that's not too confusing. But notice how we get instantly exited out. That's because we're going short here, and our stop loss is already it's in front of us. Our stop loss is here, so instantly we should be stopped out. And you can see that happening here. So we need to move our stop loss level above our short entry. So I'll do this manually. Let me put it at 1.21. And you can see we got stopped out over here around 1.21. Now if you wanted to do that programmatically with the same kind of calculation here, we would need to make another stop loss level for when it switches around. And it would actually be like this. This is for a short. This is a short stop loss level. Now here we can do the 10%, and there we have it right there. So the stop is always a stop with the strategy.exit. So let me reset this back to the way we had it before, where we're just setting up our stops for longs, but I did want to show you guys how to set it up for shorts as well, because that might get confusing. And the second method, we've seen this with the take profit example, and this is just checking if we have an open order, and we do. We have a position on the market. We're just going to use this strategy.order to exit, and we're going to go short. We're going to send a short order, and we're going to use our stop at stop loss level. And what this is doing is just sending a sell stop to go here. And that, since that sell stop is the exact quantity of our order, of our first entry, it's just going to bring us back down to net zero. So you got to make sure your quantities are identical. In this case, they are, because they're both default to 1. And you got to make sure you're sending the opposite signal when you're doing it this way. And the third method, similar to what we saw in the take profit example, we are using the strategy entry. This is how you would use it, except we need to make it the strategy only go long. Otherwise, it would just reverse the position. So instead of reversing the position here, we're just closing out the position. We're sending a short signal when it hits the stop loss level. And you'll see it works exactly the same. Now, I wouldn't do this method at all, but it's there. And the last one is when the low crosses the stop loss level. When it's less than or equal to this level, the low of any bar, the current bar, is below that level or equal to that level, we're going to send a market order to close that entry. And it's not going to close until the next bar, because that's how the broker emulator works. And there we see right here. So we crossed right here, the low crossed, and then on the next bar we closed down at the open. And that's how you set up stop losses. Alright, so in this lecture, I'm going to show you guys how to place a stop limit order. Now, there are two ways to do this. We can use strategy entry function or the strategy order function. To send a stop limit order, we need to use both of the arguments within those functions, the stop argument and the limit argument, and they need to be different. So if they're both the same price, then the order won't go through. Now, you need a stop limit order if you are trading something that's very volatile or doesn't have a lot of liquidity. This type of order will prevent slippage from your actual execution price. And depending on where you put your limit and your stop, that's where your order will be executed. So this is how you do that. This is one method how you do that. And I'm just using an if block. So if we are going long, we're going to set the stop price at the high of that bar where this occurs. And we're going to set the limit price at the stop price plus 30 ticks away. So sim info tick times 30. And it's going to be barely noticeable here, but that's what we're doing. With strategy entry, ID by stop limit, we're going long, and we set our stop here at the stop price and our limit here at the limit price. And then when we get a short signal, we're just going to close that. And that should be on the chart here. And there's really not much to see, to be honest, because it looks exactly like a buy stop. We have our signal over here, and the signal is the crossover, and we're getting a crossover here. Yes, so this is where the crossover happened, right here on this bar. The buy stop is set at this high, and this is the bar that actually triggered that buy stop and where we went long. And then we keep looking, and this is where it closes. So visually, you can't really tell what's happening there. But I'll show you guys an example of how we can tell. But this is the second method you could use to do that, and it's pretty much exactly the same. We're just using the when argument of the strategy entry, and we are actually just going to show a short example. And I'm using my stop price at the low, and the limit price will be the stop price minus 30 ticks away. And we're just going short. So here we have a entry over here, and we got the signal on this bar, and the stop price is set at the low. It's right here, and that's it. And then here it was closed because we had a slight crossover. Close entry. Now, right now you're probably scratching your head because you can't tell any difference. So we have a working example over here where I have set two inputs, the buy stop price and the buy limit price, and I've separated them. One's at 20 and one's at 30. Then I have a strategy order, and this is going to set an order on every single bar, and it's going to be long on every single bar. It's not going to any strategy here. It's going to go long every single bar, and we're going to set the stop price at our input stop price, which will be 20 by default, and we're going to set our limit at our buy limit price. And then I'm just going to plot the buy stop price and the buy limit price. The buy stop price will be green, and the buy limit price will be yellow. And I'm going to use the fill function to fill those two plots with a light tint of green. That'll be our buy zone. And you'll see what this looks like. So I save that. Let that load up. And let me switch to the daily time frame here. Now, this green zone right here, this is our buy zone. This is our buy limit, this yellow line, and this is our buy stop, this green line. So, you can see what's happening here. This candle here is crossing the buy stop, and it's getting triggered exactly at the buy stop line. We're going long where we want to. And it's happening here, here, and here. But as soon as this candle actually goes through past the buy stop, the broker can't execute our order at this price because the price never went there. Not in this bar. The price was never there in this bar. So by default, it just assumes that maybe we got in here. Of course, you'll never know until you do some forward testing. So imagine this was a very quick bar and it jumped up past our buy stop. Maybe there was a gap in the chart. Maybe you're trading over the weekend. Same thing here. Our buy stop's down here, but we're not getting filled there. We're getting filled up here. And we're getting same here, all the way through. So we're getting filled in this buy zone, but way beyond our buy stop area. So we're getting in at a way worse price than we expect. And then here's the buy limit. And you can see now that the buy limit limits where we can actually get in. And we're buying here, and it's beyond the buy limit now. And there's no orders to buy, even though we're above the buy stop. So you can see the buy limit limits how far the price can go past the buy stop. And this is what will protect you from slippage and very volatile markets, and maybe leaving a trade on over the weekend and having the market gap on you when the market opens up on Monday. So you want to set these, especially for stop losses. Say some black swan event happens and you're going long and you set your stop loss, in a good position, but all of a sudden the price just drops dramatically, and maybe you have leverage on your trade and your whole account just gets wiped out because your stop loss is a market order. If it's just a stop loss, it's going to get triggered, but it'll fill at the best price. And since that price moves so fast, it's going to go past your stop loss price, and it's going to execute maybe at the bottom. And you're going to tank your account, and you're going to lose all your money. So if you use a stop limit, it'll go past it, but it won't execute until it comes back up and comes to your limit price, into your zone that you've set. And you can make that zone whenever you want. You just have to make sure when you're doing it in here, in the strategy, in PineScript, that you make these two arguments a different price by at least 1 tick. So in this video, I'm going to show you guys how to place an OCO order. If you're not familiar with what an OCO order is, it is an order or a pair of orders that if one is executed, the other one will be canceled or reduced. So one affects the other. They are essentially a pair. And we have this definition here from Investopedia that describes it a little bit better than I just did. But that's basically what it is. OCOs are good for trading breakouts and volatility. And they will also keep the order book free of any forgotten orders. So when you're programming your orders, when you're using a strategy.order, if you don't cancel that, and if it never gets triggered, it will stay on the order book, and it will be there until it gets triggered later on, and you might forget about it. So if you use an OCO with, say, a stop and a take profit, then if it hits your take profit, then the take profit will be executed and your stop loss will be canceled. If you don't have an OCO between those two orders, then the stop loss will stay there. When price goes down there, you'll go short. So it's good for that. And OCO orders can also be referred to as OCA orders. And what OCA orders are, they are one cancel all orders. And they work exactly as the OCO, except they're not limited to just a pair of orders. You can have one order cancel a bunch of orders. And since the OCA orders encompass OCO orders, PineScript has just made one argument called OCA. And those arguments can be found within the strategy order function, the strategy entry function, and the strategy exit function. And here is some basic syntax I've laid out for you for what you might need. So let's look at some examples of the OCO and see how this works. So in this example here, I've set up 2 price points, and the upper break price is going to be set at the high, and the lower break price is going to be set at the low. So I'm basically going to simulate like a breakout, and I don't know which direction the price is going to go, so I want to put order at the top and I want to put an order at the bottom, and in this case it's going to be at the high and the low. So if price goes up, I want to buy. If price goes down, I want to sell. And I'm going to plot those prices, and for the first method I'm just going to use the strategy order function. And I'm putting it in a if block here. So if breakout, and I breakout isn't really, I define it as time is greater than this. And what this does here is it's basically a date filter, a very simple date filter. Because since these are orders, there's no real strategy here, so they're going to execute every single time. And I don't want that because we'll get an error. So if we look at the chart, we can see the high being plotted and the low being plotted. And it's being plotted from the last bar. Right? This is the high of this bar, and this is the low of this right here. And let me save this so this comes into play. And what I want you to see, whenever this saves, what I want you to look at is what's going to be happening here is there's going to be orders being placed on every single one of these bars. So, well, after this time, after the date filter here. So after the timestamp, which is going to be 10/14, which is October 14th on 2020, after this running variable, which holds the time, when that's greater than this date, then we're going to start issuing an order on every bar. And it's going to issue 2 orders. It's going to issue both of these. One's going to go long. It's going to be a buy stop, basically, and the other one's going to be a sell stop. And you see here I'm using the OCA name and OCA type. And the OCA type can be strategy OCA.cancel or .reduce or .none. So this one They have to be the same name. If they're not the same name, then they're not going to be able to cancel each other. It'll be a part of a different group. So we have to make sure these are the same, and these can be different, but in this case we want them to cancel out each other. So if this one gets triggered, we want the bottom one to be canceled. So here we are, and now you can see this working in action somewhat, right? So here we have this bar came through and it hit the green and it hit the red, but once it hit the green, it canceled the sell stop here, and this one just hit the sell stop and it continued on and so forth. Now if I didn't have this OCA condition here, if I had the same exact setup without these OCAs, you might be able to see this a little clearer. So let me remove this. Now we're taking the same orders, but we're not using the OCA condition. And I want you to look very closely here. So now we have two orders here because both of the stop orders are getting hit on this bar. And that's not what we want, because now we're basically just hedging our orders, and that's not what our strategy is. So we have a buy stop, and that got hit, and then the sell stop also got hit because we didn't cancel it after the candle went through. And the way to do that is to use this OCA. I'll save it, and now you can watch that bottom order disappear, like so. And the second method we can use is very similar to what we just saw, except in this case we're going to be using the strategy.entry. And we're doing the same thing here. We're using this date filter, so we're only going to get orders after the 14th. And after the 14th, we want to send entry orders. And one will be the upper break price. It's going to go long. It's going to be a buy stop here. It's going to go long after the green, and it's going to go short below the red. Same exact thing, just a different way to do it with the strategy entry function. And we get the same exact result. Now if I deleted this, I think you know what will happen. This bar, and we get this. We get two orders now on the same bar because the OCA is gone. Another example I'm going to show you guys is using a stop loss and a TP. Now normally you wouldn't need to do this, but in some cases you might need to. So this is a good example to show you. So here I'm going to set a input for my stop loss percentage, which would be 5% below my entry price, and this input is for my take profit, which will be 10% above my my entry price. And here's the calculations for that, and I'm going to be plotting the stop loss and the take profit. So as you noticed, this is taking the position average price, so we're only going to be using one entry here, one contract. Otherwise our TP and stop loss will get kind of mixed up because it's the average. But if there's only one order, then the average will be our exact entry price. And for an entry, we're just going to use strategy entry, and it's just going to be go long when we get a crossover, when it's go long. So here we go. All right, now we have a long, we have this crossover here, we're going long, and we have our exit at the TP, and our stop loss is down here. But as soon as this exit happens, it's being canceled. But we're doing this with the strategy.exit function, and we're not even using the OCA because we don't need to. Strategy.exit takes care of that for us. As soon as one of these is hit, it cancels the other. That's the nice thing about that function. It's built for take profits and stop losses. But in the case that you do need, or you can't use the strategy exit function, and you need the same functionality, you can still do that with the order function. Just a little more complex. So don't do it this way if you don't have to. So this is the same thing, and now I'm checking, I'm using this if condition to check if we actually have an order. If I don't do this, then these orders will be sent on every single bar, and we're going to be getting a lot more entries than just our strategy crossover here. We don't want that. We only want these to be sent when we have an order from this strategy entry. So I'm sending these out as soon as that's true, as soon as we go long, and these will be sent once, or once every bar, excuse me. And basically what they're going to do here is our stop loss is going to go short for our stop loss amount, and if that happens, it's going to cancel the other order. And if our take profit is hit, then it's still going to sell, it's still going to go short, it's going to sell, because we're going long either way. We want to get out of our position by selling while we're in. So they're both going to be short. And we've just set the stop, the limit price at the TP, because it's going to be above. And they have the same OCA name, so they're connected. They're a part of that OCA group. And we're using cancel here, so one's going to cancel the other. Now it's working exactly the same as the strategy exit. We didn't do that. This order would still be on the books. So here we got to take profit. But if I don't use the OCA, then this stop loss will sell here because it's not going to get canceled. So let's look at that. Just remove this completely. And let's run that one more time. And let's see what happens. Yep. So look, we got the take profit here, but now we're going short here because it's hitting our stop loss. And that stop loss was canceled before. So make sure you're using OCAs if you have to use the order function to build your stop losses. But please just use this method because it's the easier method. So in this video, I'm going to show you guys how to make a trailing stop loss. And a trailing stop loss is just a modification of a normal stop loss. And the difference is when the price moves in our favor, if we're going long, when it goes up past our entry point to a certain offset from our entry point, it's going to move our stop loss with it. And if the price comes back down, the stop loss won't move at all, and eventually we'll get stopped out and we'll be able to lock in some profits, opposed to just having a fixed stop loss at a certain level. Now, this is good for, if you're following a trend, if the price is trending up and you want to lock in profits before the trend reverses and goes all the way back down to your stop loss before it hits your take profit, or if you don't even have a take profit. If you just want to keep following the trend up, you can use a trailing stop loss to trail the price up as it goes. This is also good if you're trading something very volatile, like the non-farm payroll, and the price moves up very quickly and you don't have time to move your stop loss manually. You put in a trailing stop loss and it will move up with the price before it comes back down. So to program this, there's actually a couple things we need to do. And before I show you how to program it, I just want to show you visually what it kind of looks like. So I already have it programmed, and I actually have the levels being plotted out here so we can see it visually. So here we have our crossover go long entry, and we're going long here. This yellow line represents our entry price. Once we enter, the trailing stop loss becomes active or semi-active. So this sort of visible line right here is where our trailing stop loss will kick in. So we don't actually have a stop loss set up with this right away when we enter. But once the price moves up past this line right here, then the trailing stop loss becomes active and the stop loss is put at an offset somewhere underneath. And if the price moves up, the stop loss moves up with it. And you can see here I plotted the trailing stop with that red line, and it's right behind this bar, so it's hard to see, but if I hover over this you can see it. And my offset here is 100 ticks, which is 100 pips because I'm on the Forex, I'm on Euro USD. And if we look at the high here, and I draw the percentage pips away, it's about 100 pips. So the price went here and the trailing stop loss activated here, and it moved up with the price 100 ticks away. And then on the next bar, it came down and hit it. Now if I move this to a 200 pip offset, you can see this a little better. So we entered here in the same place, it was activated in the same place, but now the trailing stop loss is a little further away. As soon as it was activated, it became 200 pips away. And that's, you can see the 200 pips right there, 201 from the high. And then we didn't make a new high here, so it stayed in the same spot. This bar came and it moved up a little bit because the high went a little higher. And you can see here, it's always going to be 200 pips away from the high. We got a new high here, and it moved up a little bit, right? And the activation level is always going to stay the same because that's where it kicks in. And you can see it follows this trend all the way up. It keeps moving up, keeps protecting our profits, keeps locking them in, and it's also protecting us from losses. And then finally, this bar comes down, or this one right here, and it triggers our stop, and we're out. So let's look at how we program that. Now there's a lot of extra code here because I'm using a date filter, and I have code for plotting the trailing stop so we can see it visually here. You don't need all of that when you're programming it, but because I'm a visual learner, and I'm sure some of you are as well, I had that code in here. So this whole part of the code right here is just filtering the date for us: test start year, test start month, and test start day. That's just to make sure that we don't start trading until a specific date. Then after that, there are two different ways you can set a trailing stop with PineScript. We can set our activation level at a price level or an amount of points away from our entry, which is also ticks. So I used points in this example, and I have it set at 150 points for my entry. And you can see that by looking at this yellow line. And at 150 points for my entry is our activation level. Now if I put in a price here, the default price, this would be trail level, and I put in 1.178, which is roughly around the same area. So I can switch this to price, and you'll see that price level around the same area. Right here, 1.78. So it's not really much different. Depends what you want to work in. And if you want to activate your trailing stop at a certain price, you can do that, or a certain amount of ticks away. And I'll show you how to do that right here in the code. The other input I have is the trailing points, which is, it's one of the options. You could use the trailing level or the trailing points, which I just described. And that's what this input is. I use 150 ticks away. And the trailing offset is for the actual trailing stop, the offset from the high, if we're going long. So how far it's going to be away from the price. And then this is just the test period start for the date filter. So then I have this code here, which actually just tracks our trailing stop, and it plots it. So I can describe this a little bit for you. So here I'm just initializing a float for t-stop, and then if we're going long and the high is greater than or equal to our trailing stop price, and because I have two options, the price level or the ticks away, I'm using this conditional here to check for that and to compare against that level. So if I'm using the price level, it's going to return the price level that I set here with this. And if I'm using the point level, it's going to use the price that is 150 ticks away from our entry. Trail points times the min tick plus the average price that we got in, which is going to be our entry price, because we're only going to be using one entry at a time. There's no pyramiding. And then it just takes the max. The t-stop will be the max, either the high minus the trail offset times the min ticks. So that's the high here minus our 150, or it's 200 in this case, because I changed it here. It's 200. Or it will be the last trailing stop. So the previous trailing stop. Whatever one's more. Then it will adjust it and it will reassign it to this t-stop variable. And if there is no order in, then it'll just say the t-stop is NA, so it plots, or doesn't plot anything. So it won't plot a red line. And then here, to actually plot the t-stop activation level, I just check similar thing. If we're long, I'm using a conditional here to check if we're using the price input, or if we're using the ticks input, it's going to be the other part of the conditional block. So if we're using price, show the trail level as the activation level, and if not, then show the ticks away from our entry price as the actual level. And then put it in here, and if we're not long, if we're not in any orders, then just return NA for our activation level. This way, that activation level won't plot. So we can see our activation level. So this is our activation level. This is how that's being plotted here, and I'm plotting it inside of this trail price activation. And to get this color to change, I'm just checking if the high is greater than or equal to our activation level, then change the color to green. If it's not, then make it this light shade of yellow. And I'm doing the same. I'm plotting our t-stop level here. You can see trailing stop. If we're long, then plot the t-stop level. If not, plot NA. And then here I'm plotting our entry price by just plotting strategy.position average price. And it's color yellow. And you can see all this in the data window over here, where we have our SMA. SMA is being plotted, and we have our trailing stop activation, which is green, trailing stop, which is red, and our entry price. All right there. So, you don't need to do any of that, but like I said, it's just for visual. This is the actual code for the trailing stop. And the way to program a trailing stop is using the strategy.exit function. This is the only function you can use to program this. And I have a very basic setup here. My long condition is if we get a crossover and the time is greater than our test period where we're starting, this is just the date filter. So I want to make sure that we're somewhere in this area and we get a crossover. Then we're going to want to go long. And if we want to go long, then just strategy entry and go long. That's all. We've seen that stuff before, right? So here I have two exit functions, and only one of them will be active at a time. So this one, they both do the same thing. They're both going to exit with a trailing stop based off of this entry. But this one is only active when the test type is equal to points. And the test type is an input up here, the activation type. So it's going to be either or. It's going to be points or price. And that's the level, this level right here. So if it's price, then we want the exit condition to be this one. And if we're using, this one right here. And if we're using the price exit, we need to set the trail price argument to our trail activation level, which is going to be the price. And here, that's a fixed number that we put in, 1.178. That comes into the trail price, and then the trail offset is the same argument here as it is here. So the trail offset will be the same for either or, whether you're using price or points as your activation level. The only difference between that is you need to set trail price or set trail points, depending on which activation level you're going to use. So in our example here, we have a trail price. Our activation type is going to be points, so trail price doesn't matter here. So when it's set to points, this won't do anything. So I can do that, or I can have it here because it's not going to be active. Only this one will be active. And I set this argument, trail points, to tell this function how many points away from our entry do we want our activation level to be set. And then the trail offset is after our trailing loss is activated, how many points away do we want our trailing stop to be from our high. And you can see that here. It's trailing, and it has to be in ticks. So this has to be in ticks, this has to be in ticks, and this can be in the price level. And that's pretty much how you make a trailing stop. So just to clarify, all of this stuff right here, you don't need. Simply for visuals, the only thing you need is this strategy exit function with this argument set and this argument set for your trailing stop. And it should work just fine. But now you can't see the activation level, you can't see the entry level, and you can't see your trailing stop working. But when you're programming this stuff, it's very nice to be able to see visually how these things are working. So that's why I've included this code here, so you can get a feel for it. Before we dive into the mechanics of how a strategy is simulated, I need to make sure you understand how your code is being processed. So when you add a strategy to the chart, what you're really doing is running a program with instructions. But how are these instructions being processed? Well, according to Tradingview, instructions are run once on every bar close during backtesting and forward testing by default. So that means if we add a strategy to a chart with 1,000 bars, our script will be processed 1,000 times, once on every bar close, starting with the first historical bar. It will continue after to process the script in real time on each new bar close. Keep in mind that the script runs on the bar's close, so any orders triggered on that bar won't be sent to the broker emulator until the open of the next bar, unless you have process orders on close equal true in the strategy annotation, in which case the broker emulator will send orders at the bar's close. You can set your strategy to perform one additional calculation after an order is filled. To do this, you need to check recalculate after order filled in the strategy settings properties, or do it in the script's code using strategy calc on order fills equals true. In the real-time bar, you have an additional option of configuring script calculation to occur every time the price changes. To do this, check the recalculate on every tick option in the strategy settings properties, or specify in the script's code using calc on every tick equals true. Now, it's important to realize that if you use this setting, it will not affect calculations on historical bars. So, in actuality, you will be running a different strategy while forward testing. So use this setting only when you really understand what you are doing. What is execution? Execution is the completion of a buy or sell order. The execution of an order occurs when it gets filled, not when it's placed. Quote, many investors who trade through online brokerage accounts assume they have a direct connection to the securities markets, but they don't. When you push that enter key, your order is sent over the internet to your broker, who in turn decides which market to send it to for execution, unquote. An easy way to think about execution is when you are online shopping. Each item has a listed price. You can view this as the market price. Now, if you want to buy an item, you add it to your cart, check out, and pay. You're essentially sending a buy market order to the store. Once you hit the pay button, the order starts to execute, and depending on the store and your payment method, it can take some time for your payment to be fully executed. If your payment method was declined, your payment wasn't executed. If everything runs smoothly, your payment was executed and has been filled. In trading and investing, there are many different processes for executing an order. We have order to the floor, which is a time-consuming order processed by a human broker. There is order to market maker. This is your order is being sent to a market maker for execution. There is electronic communications network. This is an order that is programmatically processed and executed by a computer, an algorithm. This is the one that you're probably the most familiar with. And there is internalization. This is an order that's sent to the broker's own inventory. The broker is trading among himself. You can read more about execution with some helpful resources I've linked at the end of this video. What is a broker emulator? In real markets, orders are normally sent to a broker to be executed. There are some cases where you can execute orders without a broker. This is called over-the-counter or OTC trading. Either way, your order still needs to be executed either by a broker or one of the methods that a broker would use. When you are testing a strategy with simulated orders, you need to emulate the broker, the orders, and the executions. A broker emulator does just that, and this is what Tradingview uses to simulate our strategies. So, how does the broker emulator work in Tradingview? When a strategy is applied to a chart, TV runs the code across every historical bar and then continues to calculate the strategy on each new tick or data update. This is known as backtesting and forward testing. Now, it's extremely important to understand how the broker emulator operates in each phase and how it's not 100% accurate due to limitations in market mechanics and data. During the forward testing phase, the broker emulator sends and executes orders at chart prices. Now, real buying happens at ask prices, and real selling happens at bid prices. The broker emulator does not take into account market depth, also known as liquidity, spread, which is the bid and ask, and execution speed. The broker emulator does simulate commission and slippage based on a fixed amount you manually set, but slippage isn't 100% accurate and can never be fully simulated until you are willing to accept some margin of error. Now, it should be duly noted here that until you take your strategy live with real money in real markets, you should always assume a margin of error on your test results. Some things just can't be simulated, and some things just aren't really worth the hassle. So when you're backtesting, things are a little different. We no longer have access to tick data like we did with forward testing. Instead, the only data Tradingview can show our strategy is the open, high, low, close, and volume of each historical bar. We lose all intrabar information, which is essentially the range of chart prices between the OHLC values. Without that intrabar information, we don't know how price moved within that bar. So now the broker emulator needs to make a few more assumptions on how an order might have been filled. Now, if you look at the docs for the broker emulator, TV tries to explain these assumptions, but the visual they include is less than ideal. So I have included my own bars that I drew by hand with my mouse. Remember, this fill logic only applies when backtesting. Now, before I jump into describing this logic, I feel the need to reiterate why this happens, just in case it hasn't clicked yet. So, during the backtest, our script runs once on every single bar close. That means if we are on the 1-day time frame, our script will run once at the end of the day for every historical day. Since it runs only on the close of that bar, that means it never sees any of the price movements that happened during the entire day. All it sees is the end result, which is the high, the low, the open, and the close. So, the broker emulator has to assume how the price might have moved during that bar. This is important because we might have two orders triggered on the same bar, and we need to understand which order gets triggered first according to the broker emulator. If the bar's high is closer to the bar's open than the bar's low, the broker emulator assumes that the intra-bar price was moving this way, from the open to the high to the low to the close. Now, if the bar's low is closer to the bar's open than the bar's high is, the broker emulator assumes that the intra-bar price was moving this way, open, low, high, close. Now the broker emulator also assumes that there are no gaps inside bars. This means that every single price at every single tick in that bar's range is available for order execution. And finally, even if the recalculate on every tick option is enabled in strategy properties found here or here in the script strategy function, the broker emulator's behavior still uses the above logic. Basically, that setting has no effect on historical bars. Okay guys, so let's jump into some practical examples. And what I'm going to do in this video is I'm going to take a written strategy and I'm going to convert it to code. And I'm going to do this live so you can see the issues and things that I use and things that I do so you can get a better feel for how you can do this on your own. So what I did here is I just did a Google for best Forex trading strategies. This article popped up and it just gave me a list of some strategies. So the first one is, there's a bunch of them in here, and I'm going to go with the first one. So this first one is a 50 pips a day Forex strategy. And it basically goes like this. One of the latest Forex trading strategies to be used is a 50 pips a day Forex strategy. I don't really want to read all of this. So basically the GBP USD and the Euro USD currency pairs are some of the best currencies to trade on this strategy. Okay, after the 7 a.m. GMT candlestick closes, traders place two positions or two opposite pending orders. When one of them gets activated by price movements, the other position is automatically canceled. Alright, so we are going to be trading on either one of these pairs, and we're going to be trading on the 7 a.m. candle. We're going to wait for that candle to close, and it's going to be on the GMT time zone. And we're going to be using two stop orders, two pending orders here, looks like. And it says the profit target is set at 50 pips, and a stop loss order is placed anywhere between 5 and 10 pips above or below the 7 a.m. candlestick after it closes. This is implemented to manage risk, of course. After these are set, let the market do the rest. Okay, and here's a little image they provided of these 7 a.m. candles. That's not very helpful. It doesn't show the strategy here. The orange boxes show the 7 a.m. bar. In some instances, the next bar did not trade beyond the high or low of the previous bar, resulting in no trading setup, unless the trader left their orders in the market. The effectiveness of the trading bot has not been tested over time and merely serves as a platform of ideas for you to build upon. Okay, so what is the name of this article again? Best Forex strategy for you in 2020? Best Forex trading strategies that work? That's interesting because it says here they didn't even test this. Well, that's no problem for us because we're going to build this and we're going to test this ourselves and see if it actually works. So, before I switch over to the Pine editor, I'm going to copy this. And that's the logic. Let's open up a new Pine script here and go to new blank strategy. And let me see. Let's paste in this trading logic. That's great. Now let's make this readable. And I'm just going to place this on new lines. After the periods. After a period. Okay. This way we don't have to switch back and forth between the website. And we can see the logic nice and clean. And whoever we share the script with can read this and be like, oh, okay, this is how this works. And maybe we can even just, take the link from this and drop it in here. So if anyone wants to go verify, they can. All right. So we don't need this, the base plate, boilerplate, template. And we got this. So let's change this, the title of our strategy, to 50 pips a day. And give it a short title called 50p. And this short title is just what shows up when we add it to the chart up here. If we don't give it a short title, then this will show up. And make sure we get that comma. Bam. Save that. 50 pips a day. And of course, we don't have any output, so we get an error. So, I'm already on the British pound, so we don't need to change charts. We could change to the Euro USD. And the next point of logic is this. After the 7 a.m. GMT candlestick closes, traders place 2 positions or 2 opposite pending orders. So the first thing we want to do is figure out when this 7 a.m. candlestick closes. We want to be able to place a trade on that candlestick. And since it's 7 a.m., we can use the 1 hour, anything below the 1 hour. So let's see how we do that. So I'm going to call this variable trade start. And I'm going to use the time variable, which gives the Unix time from the beginning. It's going to be an integer, and it's always going to give us the exact time on that bar. So this is a built-in variable that shows the time. And I want to make sure that the time is going to be equal to 7 a.m. And the way I do that is I can use this built-in function called timestamp. And this is what timestamp looks like. There's a couple different syntaxes we can use. And this function returns the Unix time of specified date and time. So I'm going to specify 7 a.m. every single day. And since it's returning the Unix time, this time variable is also in the Unix time format. So I can put them equal to each other. So when this one's equal to 7 a.m., then we get a trade start signal. This will become true. So timestamp, we have first argument could be year, month, day, hour, minute, second. Returns an integer. And then the next syntax we could use is time zone, year, month, day, hour, minute, second. This also returns an integer. And the other two will return series integers. It's the same exact thing. We want the time zone because we need a GMT candle after the 7 a.m. GMT candlestick closes. So what I'm going to do here is I'm just going to put in these arguments, which is year and month. These are built-in arguments we can use. Day of month, not just day. And the hour we want is 7. 7, there we go. And we'll do it at 0 minute and 0 second. So for time zone, we need to figure out how to represent the GMT time zone. So if I command click on this, it will show me in here some examples. And you see this one's using the time zone here, GMT plus 6. Okay, and down here there's some remarks that actually gives a little more detail on the time zone. By default, it's set up as SimInfo time zone, and what that is a built-in variable that shows us the time zone of our chart. And you can look at that here. I'm in the way. So right here, this is the time zone of the chart. I have it as UTC, but you can change it to your local time zone, your exchange time zone, whichever one you'd like. But when you do that, that siminfo.timezone will be changed to that. And by default, it is that. So if I just did this, it will be UTC in my example, because I'm on that. So to be precise and make sure that I don't have to make sure that is GMT, that is synchronized, I can just put that in here. And GMT plus 0 will be the GMT time zone. That's what I want. Now, we want to verify this. So I'm going to plot this. I'm going to plot trade start. And if I try to do this, this won't work because you can't plot a Boolean. So I need to convert this Boolean into some integer or some kind of series, anything but a Boolean, right? So I'm just going to do 1 for true. If plot start is true, then plot a 1. If it's false, plot a 0. Okay, and it's been saved. The only thing I need to do now is add this to the chart. To verify, get this out of the way. We're on the 1 hour time frame. Let's find a 7 a.m. bar. 7. Now if you look up there in the top left, you see 50p and the 1.0. and we're on the bottom. It's October 16th, 2020 at 7 a.m. GMT, and we got a 1, which means this is true. The trade start signal is working correctly, because the next one is 0, 0, 0, 0, 0, 0 until the next 7 a.m. and we get a 1 again. You can also see this in the data window over here. See that 1? Okay. Now what's happening is this timestamp is converting this 7 a.m. to the Unix time zone, and this is becoming true. These years, this is a built-in integer, series integer, built-in variable that just always shows the current year of that bar. So if it's 2020, this will be 2020. If we're backtesting in 2018, this will be 2018. It just moves along with the bars. Same thing with month, and same thing with day of month. And day of month will be a number for that certain day of the month. So we can actually change our plot here so it's a little better, a little more visible, a little more intuitive on the chart. And the way we do that is a little trick here to make a vertical line. So I'm going to change the style to a column, plot.style columns, and then I'm going to make the color, doesn't really matter here, I'll make the color silver, and I'll change the transparency to make it a little lighter, like 80, so it's less visible. And let's give it a title actually, so we know what it is in the data window. We'll call this trade start. And one more thing, we need to change these values here. So right now it's plotting a 1. Let me just show you. And 1, well, since we're on the GBP USD, it might show up if we scroll down. Right, we're getting these 1s over here. But here's a better way to do this. We can actually turn this 1 into a 1 billion. And just make the 0 in NA so it doesn't plot at all. And now we get a nice vertical line because this column's going all the way up to 1 billion, so it's pretty much a vertical line. And now every single 7 a.m. bar has a nice silver line going through it, indicating where our trade will start. Everything else is NA. Okay, so we have our signal for the 7 a.m. bar. Now when that happens, we need to set a couple pending orders. After the 7 a.m. candlestick closes, traders place 2 positions or 2 opposite pending orders. Now it doesn't say where to place them. I'm going to assume we place them at the high and at the low. I mean, that would make sense. So if trade start, so when this is true, when we get this silver line, then we want to place a buy stop at the high and a sell stop at the low. So strategy dot entry, and we're going to call this buy stop. The direction will be long, and we're going to make it a buy stop, of course. So we need to make this at somewhere higher than the current price. So if it's at the close, it would probably be triggered immediately. So if we make it at the high, it'll be up here. This is where our buy stop will be placed on the close of this candle. Buy stop at the high, and we're going to make something similar with our stop at the low. Now we need to change this to short, and change the ID to sell stop. Let's try that. Alright, we're getting some orders, but nothing's popping up here because there is pyramiding, and it's set to 1. So when pyramiding is set to 1, since we already got an order here, it's a buy stop. It's going off at our high. You can see that, and it's triggering on the next candle, which is exactly what we want. But you'll notice that this one isn't being triggered because we're already going long, and pyramiding is set to 1. So we do that, we'll get another buy stop here. But notice this right here. We have this buy stop set, and then the sell stop that we set at the same time was canceled. I mean, was entered as well. So we did buy stop and a sell stop. Now, according to the logic here, when one of them gets activated by price, the other position is automatically canceled. Now that's not happening here. This position should have been canceled once we went long here. So we need to use the OCA argument here. So we'll add that in. We'll do OCA dot name. We need to give it a name and we need to give it a type. So the name needs to be the same, and we'll just call it breakout. And the OCA type be called strategy.oca, and we can use the alt key here, cancel. We'll do the same thing here. And okay, perfect. Let's do that again, and let's see if this order disappears. Add in the pyramiding, and it's not there anymore. Great. So now the other order is being canceled, exactly like the logic says. So that's this first part right here. Now we need to set up a profit target at 50 pips and a stop loss below the 7 a.m. bar. So let's set up our profit target. And we'll use the strategy dot exit function for this, because this is the best one to use when you're setting up a profit and a stop loss. And we're going to call this, we can give it its own unique ID. We'll just call this one buy exit. And let's look at the syntax here. ID from entry. From entry will be the long entry that we named buy stop. We'll keep the quantity as the default, which will be 1, because our strategy entry quantity will be 1. Just keep that in mind. If you are entering with more than the default value, you need to make sure that is reflected in your exits, unless you intend to do partial exits. And we need to set the take profit. Now we can do this two ways. We can do it with the profit argument, which will automatically be ticks away. Now if we put in 50 here, this won't work like pips. We need to actually convert it to pips. So let's see, let's save this and see what happens. Now it's only going to set up the exit for the buy stop. But if you look here, the exit's working. And the nice thing about the strategy exit is it's sent, even though this entry was sent before the exit, this exit is still sent on the same candle. So we can actually enter and exit on the same candle, which is really nice when you're working with limit orders and the exit function. So here, let's look at this. That's 50 ticks, but on the right side you can see 4.9. It's supposed to be 5, right? So pips, those are pips right there, and it's only 5 pips away. It's supposed to be 50. So we can change this. We can just hard code that into times 10. So now it's 50 pips away. Of course, we want to be able to set that up dynamically, but for now, let's just get it in there and change the values later. Now, that's 50 pips away. That's our exit. Awesome. Buy stop, buy exit. Great. So this is working, and then this one. See, we're entering here, we're exiting here, but this candle also set a new buy stop and a new sell stop. But because the pyramiding is at 1 right now, the buy stop was not entered, and our sell stop was triggered here. Now that's may not be what we want, so we could set it up. So get rid of the pyramiding. So for now, let's just do this. So we keep everything very explicit. Strategy dot position size, where is it? Position size equals 0. So by doing this now, we will only get these entries, these buy stops, to be set up when we're flat. So in this case, no buy stops will be set up here because we're still flat. And okay. Now another way to set up this strategy exit. Actually, before we do that, let's get the stop loss in here for the short position. So we want to exit the sell, and we're going to do sell exit, and our profit will actually be the same, because the nice thing about this function is it knows which direction this sell stop is in. So profit's the same there. Okay. And some orders aren't popping up. What's going on here? Well, pyramiding won't work because I just added in that strategy position. Size is equal to 0. We're getting orders. We're getting 21 closed trades. So maybe we are locked up somewhere. So this is only a TP. We need to add in the stop losses too, because maybe we're not getting stopped out and we're just in a long running trade, because it looks like we're only winning trades, right? So right now we're in a loser, probably a large loser, and it's not closing because we're not getting margin called or anything. You can see that here. Yeah, we have one entry short sell stop at 126.813, and we haven't hit our take profit yet because it's probably gone up since then. Yeah, see, we went short here and it's just been going up since then. So we want to get stopped out at some point, you know. So let's add in our stops. Now, where the stop is, order is placed anywhere between 5 and 10 pips above or below the 7 a.m. candlestick after it closes. So we can set up the stop actually in the same function here. We can do profit, and there's also another argument called loss. And this is the same thing as profit. We can set it up in ticks. So it was 5 or 10 pips below or above candle. So for the buy, we're buy stopping, so we want it below the candle. So we'll do it low, and then we'll just do -5 times 10 to turn that into a pip. And then for the short, we're going to do it at the high plus 5 pips times 10. And let's make sure that this particular part gets executed first, so we're not doing the low -5 and then all of that times 10, because that might put it in a way different place than we expect. The order of operations here, math. It's fun, right? There we go. There's our exits being actually placed now. And now we're getting orders every time. Let's take a close look at some of these to verify everything's working correctly. Interesting. So here we have a buy stop and a buy exit in the same exact place. It looks like we're doing something wrong here, because our buy stop is being triggered, but then our stop loss is being triggered right after in the almost exact same spot, and it should be triggering down here. So let's take a look and see what we did wrong. So we're using the loss argument, and as I stated before, the loss argument is similar to the profit argument. So it converts the values to ticks. And since we have the low of the price in here, that's being converted to ticks, and then that's being subtracted from 50. So we can't do that because it's not going to place it at that price. It's going to place it at the whatever that ticks is at the low. So 1.3 ticks minus 50. So that's why we're getting triggered right away, because we're getting a negative value in here, and it's just triggering stop right away. So we can actually use the other argument that's built into the strategy exit function, which is the limit argument. And with the, not the limit argument, the stop argument. The limit argument is for the take profit, and the stop argument is for the stop loss. Just like the profit is for the take profit and the loss is for the stop loss. You can use either one. But these two, profit and loss, are for usage with ticks, and limit and stop are with actual values, price values. So now if I put this in here, this will work to a certain degree. So I have the low in here. It's going to be stopped. The stop's going to be placed at the low, and it's not going to be converted to ticks this time. -5 times 10. Now I got to be careful here, because now it's not being converted to ticks. So this is minus, it's the low value, which is 1.2902 minus 50, which will put me underneath. It'll be a negative number. So I actually need to also convert this to a tick value. So siminfo.mintick will give me the tick value of the current instrument that we're on. But I need to make sure that I'm just multiplying that value by these 50, by the 50 pips. The parentheses look good there. And let's see what happens. I'm going to save this. So now this stop should be placed just 5 pips underneath, and it looks like it's getting hit. Let's verify this by measuring, and we got 5 pips exactly. Sweet. So let's do the same exact thing. The sell exit, and you know what? I'm just going to take this entire argument out and put it into a variable that we can control. So I'm going to call this one stop loss. This will also be called stop loss. And then I will calculate them here. So 5 times 10 times siminfo min tick. That looks good. That's fine. Okay. Parenthesis here. So now this stop will be calculated at the high plus whatever this value is, which is going to be 50 times the min tick. And that'll be above for when we're going short, and the opposite is true for when we're going long. So we just took all those calculations out of this function, and we just put them somewhere else, stored them in a variable over here called SL. So nothing changed, just cleaned up the code a little bit. And we can further clean up the code and make it a little more interactive by putting in an input here. Input, we'll call this one stop loss. Stop loss equal, and this one is going to be called pips under bar, pips under over bar. Let me see, and pips away from bar. It's hard to be descriptive here. Pips away from bar, stop loss pips away from bar. Jeez, okay. And that's just the title, and we need to actually put in the default value here, which would be 5 pips. And now we can control this from our settings. Just place that there. So now whatever we input into here, be calculated here, and it will be set on our stops. And we can do the same thing with the profit. So I'll do pips a day, 50. Change this identifier, they can't be the same. And we'll go TP here. Just call this TP. The I.TP times 10. And now instead of having this calculation in here, just put TP. So now we're only calculating this once instead of twice. So it improves the efficiency of our script. Let's verify everything works. Looking good. Stops are working. Let's see if we can find a take profit that works. Here's one. How many pips away is that? There we go. There's 50 pips away from the entry. And like I said, you can now modify these values inside of the settings tab and the inputs here. We have the stop loss pips away from bar and pips a day TP. So if I adjust this, you'll see this move up and down. So it's moved up. Takes a second. There it goes. And I think that's it for this strategy. It's a pretty basic strategy. We've got our profit target set. Stop loss order is set. Between 5 and 10 pips, we just set it to 5. And that's it. That's all there is to this strategy, and we're done with that. Hey guys, we're about to jump into another practical example. So this one is going to be the Forex 1-hour trading strategy. I grabbed it from this website that I'm not affiliated with. I just did a quick Google search and found the best trading strategies of 2020, supposedly. So I'm going to convert this trading logic into some Pine script so we can backtest it. So this one here says that we can take advantage of the 60-minute time frame. It tells us a list of currencies we can use, blah, 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 blah. It says we can use the MACD on MetaTrader and MetaTrader 5. That's just another backtesting platform that you would download onto your desktop. And let me see. We're going to be using PineScript. Buy trade rules. So you can enter a long position when the MACD histogram goes beyond the 0 line. The stop loss could be placed at a recent swing low. Okay. Sell trades. You can enter a short position when the MACD histogram goes below the 0 line. The stop loss could be placed at a recent swing high. So the buy and sell are basically just opposites. Copy that. And below is an hourly chart of the AUD USD. The red lines represent scenarios where the MACD histogram has gone beyond and below the 0 line. Okay. And that's it. Pretty basic. So I've got that copied. Let's open up the Pine Editor over here and switch to a blank strategy just so we get this strategy annotation. Of course, we could just type that in, but why type when you can click? Okay, let's copy this. Very simple. And for our progeny. Okay, so first thing of order is to change the title. So this one is the Forex 1 hour strategy. I'll give it a short title, or title, equals F1H. F1HS. Sounds pretty cool, huh? You could even put an X in there, so you know it's FX1HS. Alright. You can enter a long position when the MACD histogram goes below the 0 line. One thing I'm missing in this document is this bit of logic here. Seems kind of crucial, right? Now we are on the GBP USD, so that's okay, and we want to be on the 1 hour time frame. So long position. Well, we need the MACD histogram. Alright, so let's get the MACD in here, and to do that, PineScript has a built-in MACD indicator for us. So we can just call this function, and we get the MACD just like that. And if we hover over it, we see the syntax. And we need to input a source, a fast length, a slow length, and a signal length. And then it returns 3 values. So it returns a tuple of series float, and series float. Now if we look at the MACD here, we can figure out what those inputs are and what the outputs are. So let's add the basic MACD to our chart and look at this. So for the inputs, we have fast length 12, slow length 26, source is close, and the signal is 9. So source, close, fast length, what do you say, 12, slow length is 26, and the signal is 9. Now in order to return this into some identifiers, we need to wrap it in these parentheses here, because it's going to be a tuple of 3 MACD series, MACD line, signal line, and histogram line. So MACD line, signal line, histogram line. There you go. And if you want, we can just plot all of these to see. Plot MACD line, just to make sure everything's lining up with our indicator at the bottom. MACD line, signal line, and the final one, histogram line. Histogram. And of course I could make this color, I could change it. Histogram line is greater than 0. Then make it color green. And if not, color red. And make a style equals plot.style. Columns or histogram. Signal line's good. MACD line. And we want this overlay to be false. So it will plot as an indicator down here. So let's save. Call this Forex 1 hour strategy. Mismatched input. Expecting. Oh, we missed a comma here. Looking good. Add the chart. Got another error. Color equals expecting. I'm missing something here. Got all my commas in place. Histogram line. Let's greater than 0. Ah, the ternary question mark there. These the debugging here is not that intuitive, so you really got to pay attention to your syntax. But at least it tells you, if you click on it, it will bring you to the line where there's a problem. So most of the time I find that I make errors with commas, and sometimes you just miss these. But it's mostly just commas, especially when you get this type of error, mismatched input. That usually means you missed your comma, or in my case, this question mark. So now this should add to the chart. Okay. And look at that. We get a histogram that is almost identical. And it looks like this histogram is actually columns. I can change the style in here just to verify that. Yep. And I could change these colors of here, but we're not even going to use these. The only thing we're using for this strategy are these columns here. But I just wanted to verify that the values were as they are. And they are. So I will just, remove this and start coding up the strategy logic. Since the only thing we're using is the histogram line, that will be the only thing we're using. So you can enter a long position when the MACD histogram goes beyond the 0 line. So go long, histogram line. Now we could do greater than 0, but then we would get trade signals for everything greater than 0. And we just want it when it crosses over that. So instead of doing greater than 0, because technically it is beyond the 0 line, let's do a crossover. And this is a crossover between an X and a Y argument. And the X argument is going to be our histogram line, and the Y argument will be the 0 line. You can see the syntax here. So if the previous value of X was underneath the previous value of 0, and then on the next bar, this is what it checks for. In the next bar, it crosses over the 0, then we get a crossover, and this returns a Boolean. So this will be true when we get something from, well, let's just plot it, Let's just plot long. If it's long, then we'll do a nice little vertical line here. And A, color equals color green, and style equals plot.style, columns, transp, title, let that load up. Well, not exactly what we wanted. Let's just throw this on the chart. Okay, so we can see here using the other MACD. So here it was red, crossed over, and then it crossed back underneath. And this one looks like it's red, it's barely noticeable. And then we get another crossover here. And again here. So that's working. So long, beyond the 0 line, stop loss could be placed at a recent swing low. Let's just set up the short, which will be identical, so that should be easy. And all this is a cross under. Don't even have to change the arguments, but we do have to change that. Short. And let's plot this. I don't like this title. Okay. And our cross unders are plotting good. So we're getting a long signal here and a short signal here, and so forth. Pretty simple. It doesn't tell us anything about limit orders or pending orders, so it looks like we're just going to take a market order, and then our stop loss could be placed at a recent swing low or high. So if we don't even need an if, let's just do strategy. We could use an if, but we don't need it. Strategy.entry, and we'll do MACD crossover long. It's a long ID, but it's okay. Strategy that long, and we'll just make it a market order. And then we'll do when. Well, when we get a long signal. And we can do the same thing when we get a short signal. Strategy.short. cross under. Now let's see what happens. Because we're using entry, we'll get this reverse logic that it automatically does that for us. So it's going to reverse our positions, and we're going to bounce back and forth over here. So here, we get our signal on this, but because it's a market entry, it waits until the bar closes and opens on the open. And you can see that here on the next candle. So MACD crossover long. And then we get another short signal here, and it's going reversing our position, going short. And vice versa. And if you want to change that, it has no effect at all on your strategy performance, but you can change it here with process orders on close argument. Process orders on close equals true, and what this will do, will send these orders, will process them on the close of the candle instead of on the open of the next candle. Now this could make a difference if there was a large gap between the open and the close. So I take back what I said. But see here, in this case, it makes no difference. But just something you can do. Okay, now let's add in our stop losses. So, I'm just going to copy this, and I'm going to change these to exits. The reason why I copied it is because I don't feel like rewriting that. That's it. So strategy.exit, give the exit an ID, call this one the long exit. And what is the logic for this? The stop loss could be placed at a recent swing low. So we need to figure out where the swing low is. And this is from entry. Let me just finish this up before I jump to something else. From entry. And of course we don't need this. Alright, so we're going to set a limit for our take profit. Sorry, just a stop actually. We don't have a take profit in this strategy. We could set one up after. If you wanted to, you could use the profit argument or the limit argument for this. So we're going to set our stop, and this one will be at the swing low. And this is a variable we haven't made yet. And let's do the same thing here. Stop equals swing high. From entry. So this exit will exit from the MACD cross under short entry, and we'll call this one the short. Pretty straightforward. Now let's make our swing low logic. I'm going to place that up here where we're doing our calculations. Now, swing low is somewhat subjective. Say here, but within what window? Like, what's your window? Is the swing low of this one? Do you want a daily swing low? Like, what's the daily range, the low of the daily range? So we entered here. Where is the swing low back from here? We could say this one. Go to the daily. You could even look at a weekly bar and be like, on the weekly bar, I want the weekly low will be my swing low. This all depends on you. I'm going to keep it simple here, and I'm going to use a built-in function that will give us the lowest bar in a certain window. So we can put in as an input, say look 24 bars back, and find me the lowest bar at that point. So here, 24 bars back, press shift and look back. This would be the lowest bar in that. And since we're on the 1 hour time frame, 24 bars back would be 1 day. So it's another way of doing a daily look back, or daily range. So how do we do that? Well, actually really simple. Swing low equals lowest. Is another built-in function, and you can use one argument or two. By default, the source argument is the low, so it looks at the lowest value of each bar. And we can set up a length to look back, so it's going to look back. And we said 24 for 24 hours. Now, since we're looking at the lowest, the default is automatically the low, so we can just put in 24. And for the swing high, what do you know? They have another function called highest. and by default it looks at the high. So it would be something like this. So it's going to go 24 bars back. It's going to look at every single high and find the highest one. We'll call this one swing high, which is this, and the swing low is here. So I'll just keep this argument in here to show you that you can do it both ways. And let's save that. Now let's look. So we got to exit here. To crossover, go long, long exit. Now there's no take profit, so the only reason this exit happened is because we hit a swing low, which in the last 24 hours it looks like it was this one right here, and that's exactly where it's happening. Now let's go ahead and add an input so we can plot this, and that basically wraps up this strategy, to be honest. I'm just going to put in some visual stuff. So show swing highs, high equals input, and we'll put in true as the default value, and we'll give it a title, swing highs, swing high. Do the same thing for the low. That will also be true. Bam. And now let's plot it down here. So plot I show swing high. If this is true, then we plot the swing high. If not, don't plot anything. And we can give this a color of yellow. Title, plot style. What am I doing? What am I doing? Swing high. That's good. So now we'll only plot if we have that triggered as true. And obviously we'll do the same thing for the low. Make this one white. Swing low. Show swing low. There you go. Now our swing low is being plotted. We're getting this crossover signal here. We're buying on the close on the same bar. And we're exiting here. Get a crossover short here. And the exit is going to be on the reverse entry. So there's no take profit. We could add in a take profit. Of course, you can continue developing on this, but I think that's it for this strategy. So, I mean, that's it. That's all they got. It looks okay. Pretty basic, but you want to keep things simple so they're not too complicated. Of course, you want to make sure that your contract size, like we're one contract here, maybe you want to move it to a percentage of your equity, and make your initial capital correct. So whatever that's going to be, add in some commission here. Depends on your broker. You know, 0.1 is a good number to start with. Slippage, just add in a couple ticks there, 1 or 2 pips. And it looks like we're losing a lot of money on this. Your average trade, well, negative $19.38 for each trade. So it's not a working strategy. It doesn't look like. Of course, it's very basic and you could build upon this. But that's not the point of this exercise. The point is converting this to some strategy logic, and we just did that. So have fun with that. Okay, so we just made this Forex 1 hour strategy using the logic in here. Right here. And it's supposed to work according to that article, but it obviously doesn't. And we don't have a take profit in here. And we're getting lots of signals here. So I decided to not leave you guys hanging. And I'm actually going to introduce some take profit logic. And I'm going to figure out a way to filter out all these extra signals here because this isn't good. So, first things first, let's throw a take profit in here because right now the only reason we're taking profits, the only way we're taking profits is just when the strategy entry reverses positions, and that may not always be the best area considering that we're losing so much. So, I'm actually just going to make this super simple. So, to put a take profit in, we go to the strategy exit function and we use limit and we set that to where we want to take profit. And I'm going to make that the swing. In this case, it'll be swing high. So swing high for the long exit. And for the short exit, it will be also limit, but it will be the swing low. No, okay. Now let's see what that looks like. Now we're getting exits here when it hits this, which is good. We get this short, get out here, that's good. Now, of course, let me change this annotation so it more reflects what we want to see. Now, what I mean by that is we want to add in some arguments. I want to change the default arguments to something more realistic every time so we don't have to do that in the settings tab. So this will be hard coded in. I'm going to hard code in commission value. So we need to set a type for the commission. And let me see, commission, just press Alt and it will pop up with the actual values that you can put in here. And we'll do percent, commission.percent. And then we need to set a percentage, which will be commission value. 2 M's, 2 S's, underscore value. And I believe this argument is set as a percentage automatically, so 1 will work. Or 0, 0.1, depends on your broker. Slippage, we'll put that to 5 ticks. And initial capital can be whatever you want it to be. Say $10,000. 1,000, 10,000. And that's it. So now we'll get, by default, a more realistic result automatically. We won't have to come into this every single time and change our properties. So we see that reflected here, 10,000. Order size, 1 contracts. That did not change to percent of equity. Interesting. Oh, yes, I never changed it. That was just for commission. So let me do something here because this is getting long. And put this all on its own line. And what is this? Quantity? I think it's quantity. Default quantity type. Let's see me typing here. QTY. Type. And QTY. Strategy percent of equity. And default QTY value. And QTY, well, say 10%. Let's go crazy, right? No errors, that works. Now we're getting percent of equity here, which is nice. Okay, we can change pyramiding too if we want. We'll keep it at 1, commission 0.1%. Good, good. All right. Now look at this. Now let's see. Strategy tester tab still sucks. All right. Let's get rid of these. So we need to filter the MACD. And a good way to do that is just to multiply these values. So fast length 24, 52, and 18. And now you can see we have less crossovers between the 0, which is good. So let's do that in our code because this is just an indicator, separate indicator. And we'll make that a input. MACD filter input 1. We're gonna float MACD filter, and then we can do type equals input dot float, and the min val should be 0. Now we just want this here and do this. And we got an error. Okay. Unknown argument min. Min val. Oops. Cannot call MACD with argument series float. So I can't put a float in here. Fair enough. And put integer. Alright, so here's the default, which is still at 1. Now let's get it multiplied by 2 so it looks like this. Didn't get any better, but at least now we removed these signals appearing. We removed some noise from our chart. Like, we don't want that, right? But now we've removed a bunch of noise. However, we've introduced some lag into our signals. You know, we want to get the MACD to enter here, where it did on the 1. We got a nice entry here. Looks like that's a short exit. So no, we actually got a buy entry here and a buy entry here. This is the entry we want. Ideally we'd want it there, but looks like we didn't get one. So look at this lag from this here. Alt V. Oops. Bring up this again. MACD filter. And it moved it 1, 2, 3 bars away. So when you do that filter, it does introduce a little bit of lag. Was it worth it? Well, you got to look at the strategy now, and it's kind of hard to tell. It's still going down. We have less trades now with this. So there's still work to do. But that's just a quick example of how you add a take profit in and filter out the noise from your trades. What is happening? Okay, in this video I want to show you guys a really cool script made by some talented PineScript coders. It's very complex and there's a bunch of cool features that you can look at to understand how to do certain things. So they cover everything in this script. There's 2,000 lines of code and there's over 40 different strategies built into it. There's filters, there is trade management, there's statistics, there's everything you can think of. You can switch from a study to a strategy indicator within the script with just 4 lines of code. There's alerts, there's random generators, and they give you a whole comprehensive overview of the script here, and they write about it. And basically, what they're saying here is it's a sophisticated framework with hybrid code that can be run as a study to generate alerts for automated or discretionary trading, while simultaneously providing backtest results. So it's a study that has backtest results. So instead of using a strategy for your backtesting results, they're using a study. And everything that the strategy backtester would do, they built it into a study. Now this, back in the day, a year ago, they did this because you couldn't have alerts in strategies. Now you can. But this is still a very useful script because there's so much extra that comes with it. There's more statistics and features that aren't in the actual strategy backtester tab. So I highly recommend checking this script out and reading through this and understanding what this script is about and checking out some of the code. But it is overwhelming, so I'm making this video to show you guys how to jump into it and how to get it started. So basically, all that what I just said is all summed up in here, and you can use this for your own live trading if you would like, because it sends out the alerts, and they give you some use cases here in the beginning. If you want to mess around with different strategies, you can do that. If you're building a complex strategy that you want to run as an indicator, like I said before, that was an issue before they had strategies with alerts. Now it's not so much of an issue. And then they add in the filters for you. They have different exits, different stop strategies built into this. So there's 2 different ways you can use this indicator, this study, is you can go in and modify the code, and they show you how to do that in here, down here. So they say that, okay, if you want to introduce your own strategy, you have to do this, this, and this, and they give you some steps here. So customization. Now, if you know what you're doing, you can do this, but there's an even simpler way that they have built into this study, where not many people know this, but you can actually use another indicator on your script and use that as an input into an indicator. So you can have indicatorception here. And that's what they have allowed for in here. So basically you can control this backtesting engine with another indicator you have. And that's really cool because if you already have a strategy or an indicator that you want to test, you can just send the information out of that strategy into this and it will test it. It will backtest it for you. Now it's not as simple as just plugging it in like that. You have to make sure the values that you supply are the values that it's expecting. So for here it says if you want to use that strategy, the indicator, the external indicator as a filter, you need to supply a 1 for bullish or a -1 for bearish. And if you want to use it for entry signals, your plot output from the indicator needs to be a +2 for long or -2 for short. And the exit signals will be -3 for an exit, or sorry, +3 for exit from long and -3 for an exit from short. And you can even send your entry stop level by using prices here. You know, a positive price for your entry stop or a negative price if you're going short. So how do you do that? Well, they actually built a separate indicator to show you how to do that. And this one's called Signal for Backtesting Trading Engine. And then they go on to explain how to use it with the backtesting engine. And this is what I'm going to show you guys. I'm going to show you how to set this up so you can input your own code into this signal engine and run it through this backtesting engine. And I won't go through this whole backtesting engine because there's just so much to cover. So here's the backtesting signal here, and they have the trading engine on this chart set up, and they have the signal just in a separate pane. Now the signal is being input into the trading engine, like I said. And all they're doing here in the signal engine is they give you some inputs if you want to use it as a filter, if you want to use it as an entry, or stop and exit. And basically these are all true by default. And then this is the part they have set aside for you to input your own code. But they put in some template code there so you can understand how to use this. So they have a MACD they set up, and then they created the filter. And basically if the MACD is greater than 0, then it's a bullish filter. And if it's less than 0, it's a bearish filter. And then they created some logic here for your entries, and it's very simple crossover. Okay, is the MACD crossover 0? And then a MACD cross under 0 for the short entry. And they show you how to make some stops here. They use a simple ATR stop, which is average true range. It's a very common stop. And for your stop long, they took the lowest, they took the minimum of this, the lowest past 5 bars, or the minimum ATR here. So whether the close was lower or the open was lower, they take that and they subtract the ATR times 1.5%. And you can send that stop, whatever that price is, to the backtesting engine. And then for your exit here, they made some more simple logic. If you have a cross under the MACD and this A MACD, which is the EMA of the MACD. And it's long. So if you're long, if the MACD is greater than 0 and you have a cross under the EMA, that's their exit. So this is, like I said, it's boilerplate template logic. So you would put in your own logic here, your own indicators, and you would just set them equal to these same identifiers. And I'll show you guys that in another video. But I want to show you how this works first. And down here is the rest of the code for this indicator. And this function here, basically, it makes sure that we're not sending a 1, 2, or 3 for our stops. So if we are using stop prices, these variables right here, and somehow this calculates a 1 or 2 or 3, those values would conflict with the filter, the entry, or the exit. And if that happens, then we'll be sending an exit or an entry when we're really just supposed to be sending a price. So this checks for that, and it just fudges the number just one tick away. So it fixes that for us. And then basically it checks our inputs, and it looks at if we're using the filter, if that's true, and we actually have a filter. So if our input is true for the filter, and we're getting a true here, like the MACD is greater than 0, then send a 1. If it's less, then send a -1. If nothing, then send 0. And then all of that goes into the signal. Well, there's one output here because we only can use one output from this indicator into the backtesting engine. So it aggregates all of this information into just one output, and then we plot that signal to the chart. And then they go ahead and plot some shapes to kind of help you debug things, and also some background color as well. Now let's take a look at that. And they have an example up here, but I'm going to show you on my chart because I have it on my chart already. So here I have the backtesting engine up here, and it's set up to take this indicator, this external indicator. And right now it's taking this signal for backtesting engine, the one I just showed you guys. And I didn't change any of the logic inside of it. It's all the same. I'm using the MACD crossover stuff here, just the default boilerplate. And my settings here, I'm not using the filter, I'm just using entries and I'm using exits. I didn't change anything else. So you can see here that we have this signal here on the signal engine. It's sending a -2, which you can see in the blue, and we're getting this red arrow that says enter short. And the blue line indicates our actual signal. And then if you look up in the chart, the next bar, because it's processed on the next bar, it's a market order, it's being sent at the open and we're going short here. And you can see the background color turns red, indicating that we're in a trade, which is really nice. We're entered short and we're not going to exit that short until we get a short exit. And we get the short exit here. And you can see the close entry order, we're exiting that short. And then we get a enter long here, and then the enter short has no effect. And then we get another enter long. There's no pyramiding, so we're not getting another long entry set up. The backtesting engine does come with pyramiding if you want to allow that. I just made it very simple so we could see the relationship between this signal and the backtesting engine. Here we have another example here, enter long, and it's +2. And you can see the signal is just NA, and then all of a sudden it's +3, which is the exit signal, and then we exit. So how do we set this up? Well, let me delete this, and my backtesting engine is gone too, and I'm going to show you guys how to grab this. So we can go, well, I have them already saved in my thing, in my indicators and strategies, but if you don't, then you'll want to come to this link here, and I'll keep that I'll post that in the resources tab. And you'll want to like the script, or you can favorite the script right here. And when you do that, it will pop up in your favorite scripts right here. Since I just unfavorited it, it's gone. So add to favorite scripts, and it should pop up somewhere in here. I've got quite a few. Pinecoders, backtesting and trading engine. So click on that, add it to your chart. And then we can see the code. And it's locked because it's read-only right now. We need to make a copy. Actually, we don't need to make a copy in this case because we're only going to be using it as an external indicator. We don't need to change anything internally here. If we wanted to modify it to add our indicator inside of this code, we would need to make a copy so we could change the code. But since we're going to be using just the external indicator setup, we can keep it the way it is. But now I need to add the external indicator as well. And that would be here. This is another link I'll leave in the resources. And you do the same thing. Add it to your favorite scripts. And now you'll have access to the code in your favorites. And let me find this again. There it is. Okay, signal for backtesting trading engine, Pinecoders. So click that, add it to the chart. Pops up in another pane. Now right away, it's not synchronized with our backtesting engine. It does not know it exists. So you can see that because we're getting red background color here, we're getting a bunch of signals, and they just don't look like they line up. It's because they don't. So what we need to do is we need to go to the settings of the backtesting engine. And there's a lot of stuff here. So we can mess with these settings. They're just display settings. Show entry exit markers, show entry level, show take profit level. What we need here, what we're concerned about, is getting the external indicator as an input. So we go to main entry strat and we do external indicator. And this is only for the entries. We don't need to worry about an alternate entry strat, but now we need to go down and we need to allow the filters for the external entry, external indicator. Show filter state. And get rid of this stop, the chandelier stop. By default, that's on. You got to turn that off. Show entry stops, put that to none. entry stop selection, external indicator, and just change all these values so we're using the external indicator for everything. Later on, we can come into this engine and use the stops they have, the built-in stops they have, and the built-in filters with our external indicator. So we can keep our code very simple here with some other logic we have and use all these stops here, all these filters, and you can see how that could be really cool. So you have one indicator with all your filters, all your different strategies, and then you just make different strategies, you plug it in, and you see what works. So show in trade stops, we don't need that, and we can put none here. In trade stop kicks in when it passes, don't need to worry about this. Pyramiding is off, you can see that here, and they give you many options for pyramiding here, which is pretty cool. Hard exits, so external indicator, we want that on, so it uses the exits that it's receiving from the external indicator. And we keep going, all the way down here. No slippage is being calculated here. We could put this on. I like to have it on percentage. Okay. You don't need that for your external indicator, but it's just nice to be calculating slippage and fees right away. Got to be realistic with your trading. In trade events, don't need that. We can turn that off for now. That just shows you like where the high would be, where the low would be, possible tops and bottoms. You can read about that. And then they have this post-exit analysis, which is pretty cool. That shows you, how much money you could have made in the trade and how much profit you could have made, how much you did. We'll keep that on. Date filtering, that's built into it, so you can test for a certain range. We don't need that right now. And then here's all of the alert triggers that come built in. Position sizing, which is really nice. And at the bottom here, we have external indicator. We need to make sure this one is for the signal for backtesting trading engine, which is this. It's okay. Let that load up, do its thing. Now we need to come in here. And I don't want to use the filter. Include entries, include stops with entries, include exits. Okay, so I'm going to fix something here. And basically there is a setting here that I clicked, show filter state, and I'm using the external indicator as a filter. And what I didn't notice before is that when you use this, it will look for a 1 or a -1 in the backtesting engine to know if it should go long or if it should go short. So right now, this signal is sending nothing really. There's no filter being sent, and we can see that in the data window where we have bull filter is 0. And when it's 0, it just means that we can't go long or we can't go short. So in this case, all these entry signals they're not being registered in the backtesting engine. So we have two choices. I'm going to turn this filter off, so it's not looking at that because we're not sending it anything. And then it should work. And there we go. And the second choice is if you wanted to use it as a filter, there's kind of an issue built into the backtesting engine, and I just noticed this as well. So now we're using it as a filter, and if you look in this data window over here, I also need to turn this filter on too. So now we're sending a filter, and the filter is the 1 and the -1. And if you look in the data window, we have bull filter, okay, bear filter, 1, and you can see that line up here. So we have a 1 here, and bull filter is 1. But we're still not getting any trades. And this kind of threw me off initially. But when you look into the code here of the signal for backtesting, there's this function here that aggregates all of the signals into this one identifier. And it specifically says that it gives priority to certain signals first, and the filter has the least priority in this case. So if we get an entry signal and a filter signal at the same time, it will only send the entry signal first, because you only can send one signal at a time on one bar. So in this case, the filter signal comes last, which is kind of throwing this off, because here we are going from a bearish filter, and you can see on the right data window, bear filter OK is 1, so that means it's OK to go short. And then on the next bar, we're getting an entry signal, and that's the 2. And that's where we're saying go long. But notice that the bull filter is set to 0 and the bear filter is set to 0. That's because it can't send the 1 filter to go long at the same time. It sends the entry signal first, and then we get the bull filter after. And because it's happening, our backtesting engine is seeing the long signal, but it's seeing a filter of 0, and it's not sending that entry to the backtesting engine. Now there's probably a way to fix that in the backtesting engine. So what you can do is you can use a different filter, or you can use this signal generator as a separate filter. You can code it so you can change some of the internal code of the backtesting engine so that when it sees 0, the filter is not active. So it would send that buy signal. And a good way to see what's going on here is, this is how I figured this out, show filtered out entries. And we'll actually show the entries that I should have been taking that it didn't take. And you see here, we had the buy entry long here and the buy entry short, but they didn't work because the filter wasn't being sent along. And down here, we're showing, well, here, we're actually telling the backtesting engine to use the external indicator as a filter as well. Now we could use something else, like rising volume, or one of the built-in filters of the backtesting engine, or we could just use nothing for now to keep things simple. Turn this off, and we don't need that because we're not using a filter. Since we're not using a filter, we can just remove this, and everything should work as we want it to. So now we have entries and we have exits from our signal generator over here. And we just got to verify real quick. Entry long. Here we're getting a +2, and we're getting an entry long in our backtesting engine. And we're getting a 3 for the exit long. We're getting an exit over here. In the data window, you can see all these variables and all these metrics. These are the strategy performance metrics that are included in the backtesting engine. There is global information that includes all the information of your strategy that you can look at. So you have average profit per trade, which is a very good metric, and many other ones that are included. And you can see that as you hover along here. If you hover the mouse at the end of the bar, it will show you the total, like the finishing performance. You know, as you go here, you can see the performance at that point in time. So it's always changing, which is very nice. You can see at that point in time what the performance was. And you can read more about these metrics in the backtesting engine write-up in here. I won't go in depth, but some of them match up with the strategy tester tab. If you were to change the code in the backtesting engine to a strategy, which they show you how to do here, and really it's just a matter of uncommenting this one line here, commenting out the study annotation, so you have now the strategy annotation instead of study, and then scrolling all the way to the bottom. Can't scroll for some reason. You scroll all the way to the bottom, all the way, and you see this strategy calls, and you just uncomment these so they are active, and then now this entire backtesting engine will be turned into a strategy, which is really nice. And if you do that, you can see some of these metrics lining up, so you can verify that. And here is another great area for metrics. You actually have the metrics on your trade by trade basis. So during a trade, if you hover over when the trade is active, you can see all these different metrics: your slippage, your profit and loss, your fees paid, and how long it's been going on, the trade fill, and tons of other stuff. Move myself out of the way here. Your entry level. I mean, look at all these metrics here. So that's as far as I'll go with this. I may do another video where I add in an indicator we built, or strategy we built. I may add in a strategy here to show you how you would add in your own strategy, because this is just a default template strategy. So maybe we'll make a custom strategy, put it in here, and test it out in the backtesting engine. And I just highly recommend checking out the code in here. Welcome back to another episode of converting strategy logic into a strategy. So today I want to convert this indicator into a strategy, and I want to backtest it. Now, I got this in an email through Tradingview. It was featured as one of Pinecoder's featured scripts, and it was made by IO72 Signals. It is an adaptive Hull moving average. And here they have the chart showing the indicator. Note that these arrows are not part of the indicator. These are placed by IO72 Signals himself. And the RSI is a separate indicator, as well as this dominant cycle. The adaptive HMA is the indicator that we're looking at. These are just helpful in describing how this indicator is working. So basically, this indicator is a Hull moving average with a dynamic length. And the length it's always moving based on either the volume of the underlying instrument or the volatility. In this script, you can change and select which one you would like for the HMA length to adapt to. And that's pretty much the secret sauce to this indicator. So here he kind of explains it a little bit, and he shows you how to use it. He's drawing the HMA line yellow when the market is flat in consolidation, and it's showing relatively small movements. And then, it kind of describes what that indicates, what that might indicate. And the light green colors or light red colors tell if a trend is forming, but still relatively weak. Because he's also using volume or the volatility to predict if the trend is there or not. And then the darker green or the darker red is what we're looking for. And he says this is where we can expect some good and strong price movement to ride. And he says if it's strong enough many times, it marks a start of a new long-lasting major trend. This is cool. This is something that interested me, and I want to show you guys, and I want to actually convert it and see if it works. So in the settings, there's an input, this thing called a charger. This is the selection of the volume and the volatility, or the volatility. So you can select which one the HMA will be adapted to. And then you have a minimum period and a maximum period. So these are the range of the length that your HMA, your moving average, will be adapted to for the maximums. And then within that will be the dynamic length. And I'll show you how that works in the code. And then there's this consolidation area threshold he uses that has to do with the slope calculation. This is how he's calculating if the trend is consolidating, if it's trending up, or if it's trending down. He's using a slope formula. And then he has a background coloring. We can select to turn that on and off. He set up two alerts in this script that aren't really related to the script too much. One's just for when the volume is breaking up above average, and the volatility. I say they don't really relate to the script because they're not set up in relation to the HMA. They're set up in relation to his calculations on volatility and volume. So they don't do much for us. And then he gives a nice, this is what interested me here. He gives the usage of it. Very, very nice buy entry to catch big movement if price is above MA, HMA's color is darker green, and RSI is above 50. And this is what we'll be coding in the strategy. And then the sell entry is just the opposite of that. So he doesn't actually have this logic coded in the indicator. He just says this is how he uses it. So I want to take this logic, I want to put it into a strategy, and I want to backtest it. I want to see how useful this strategy, this indicator is. I want to verify on some real data. So he has some notes here. Lower time frame, of course, means more noise. True. Depends on the instrument. You might need to tweak the settings a bit till it conforms nicely and shows lots of good trades in history. So he's got it in the British pound 5-minute time frame here. And he's kind of showing how the RSI, when it's below 50, but you have a green line, it's still trending down. And then he goes on to show some exit take profit points that we can use using the RSI or a static HMA, like a faster HMA, maybe a crossover. He doesn't really go into the example there. So maybe we'll build the RSI if we can find the time. And the RSI looks like just a cross under some upper threshold. So we go along here, this green arrow, according to his long entry, and then here we look like we exit at this RSI cross under threshold. And then some more stuff here, some more stuff. Okay, so this is the script. I've added it to my favorites so I can access it. I'll do that in a second here. And basically here's the inputs, and here's how he is calculating the volatility. He's using the ATR, and when the ATR 13 bars back is greater than the ATR of 40, it's very high. It's highly volatile. So he's kind of looking at like an average ATR and looking at when there's a spike, when there's a transient in the average true range, which will basically be when the price is spiking beyond its normal range. And then he has the RSI volume, so he's using the volume as an input here. Normally you would use the close of the prices. He's using the volume. He's using the 14 bar length here to calculate this RSI volume, and then he's inputting that into the source for the HMA. And then he's using that oscillator and checking if it's greater than this 49 value. And that's called volume break. And basically his dynamic length comes down here. He's initializing a variable called dynamic length, and he's taking the average of your inputs, minimum and maximum length. And he's just selected 172 and 233 as a default. And I believe he made a note up here that normally you would want to use a 200 HMA. So yeah, he found, I don't know where it is, it's somewhere up there, but he found that the average between those is probably around 200, and that kind of makes the good HMA for him. And then when the dynamic part comes in down here, you select this charger thing. He's called it charger, either volume or volatility. And if you select volume, it gives you the RSI HMA volume, or if you select high volatility, it will give you the ATR calculation he's done here. The volatility meter is how he refers to it. When that is true, so if we have a high volume according to this, or say we select volume for our charger and we have a high volume, the oscillator is greater than 49, then this if statement will be true, which will mean that we have a comma here, which will mean that this statement here gets executed and set into the dynamic length. And it's just taking the max of either of these values. So we have the minimum length, which is 172, and then this dynamic length calculation here, which is going to be the average that we set up here. So it's probably going to be around 200 times 1 minus this adaptive percentage. I don't know where people come up with this, but this is 3.141. So he's using the pi divided by 100. So he's got this percentage of pi here minus that, which is giving us around 97. So 200 times 0.97, and he just takes the max of either 172 or 197. I'm not sure how that, maybe that changes here. Maybe I'm missing something. But he's taking the max of either one of those values and it's being returned into dynamic length. So this calculation is what it is. And then the other one, if it's not true, we're taking the min of the max length, and then this times dynamic length times the adaptive percentage. So it's going to be whatever max length is smaller, or whatever max length, min length, is larger. In very simple terms, he's just adapting the length of the HMA. Here, let's look at dynamic length. He's using it down here. So he's calling his HMA, and he's using this dynamic length to adapt to the price movements based on, in this case, volume. So when the volume is very high, he'll have a shorter HMA length, a shorter moving average, so it adapts quicker. When the volume is very low, the moving average length will be longer, so it moves more steady. Because when the price is moving quick, you want a moving average that's moving with it very quickly. Otherwise, you won't be able to, there'll be a lot of lag in your entries and exits, in your signals. And that's what he's trying to do here with this calculation. Is it right? Is it wrong? I don't know. I would have to look into these calculations more in depth. But that's what he's doing, and that's how he's doing it. And then down here, he's calculating the slope so he can show if the market is trending in consolidation or choppy. And he's got a formula for all that. And down here, he has this consolidation area threshold, which basically is looking back past 9 bars for here, and it's going to look at those 9 bars, and that's kind of how you can tell if it uses the slope, and that's how you can tell if it's trending or consolidating. Because the further you look back in a market, the cycle kind of changes. So for example, if you're looking back 9 bars here, I would say it's consolidating. But if you look back, however many bars that is from here to here, I would say that's trending down. So that's the consolidation window. If you're looking back short, that would be consolidating, referred to as consolidating. But if you're looking back further, then we're trending, and even further, we're still trending down. And then if I zoomed out, and I think you get the point. So that is what that is for. And here's how he's calculating his HMA. He's using his own. I'm not sure if there's a built-in HMA calculation. Maybe there's not. But he's got his HMA calculation here with the dynamic length. He's plotting it. And this is just background coloring. And he's got the alert set up for the high volatility and the volume. Okay. So that's the introduction to this script. Let's go ahead and turn it into a strategy. So here he's on the Euro USD 15. I am on the Euro USD 15 minute. And I favorited it so I can find it in here. 72S adaptive Hull moving average. I'm going to add that to my chart. And now I have it here. And you'll notice there are no arrows like he has here. So let's turn this into a strategy. First things first, I need to get the code. Now it's locked, so I need to make a copy. I'll go over here to more, make a copy, and save it. Now this is in my scripts. Now let's grab the trading logic usage. Copy this, bring it over here, and we'll put our trading logic down here. We'll paste that, make sure this is a comment, and we're good. All right. So our buy signal, our buy entry, price is above MA. So let's go name an identifier called buy entry and give that equal to close is greater than MA. No, not MA, but the dynamic HMA is what we want. I'm getting too literal here. It is best when price is also not too far distance from the MA, or you can also use distance oscillator to help out too. I imagine what he means there is, if you get a signal here, but look how far the price is, quite far away. So you probably want to get a long entry when you got the green, like for example here, and the price is still close. But for now, let's just get the basics set up. So close, price is greater than the dynamic HMA. The second one is HMA's color is in the darker green, which means it's charging. Okay, so, and let's just make sure we separate this logic, some parentheses. So this is the second condition. So we need the HMA's color is in darker green. So when it's like this. Now here, he's plotting the dynamic color with this function. And he's passing it the dynamic HMA and a set of 5 colors. So I don't know what these are off the top of my head. So let's bring it into this color hex program online and just paste them in here. So that looks like a green. And this one is a lighter green. So this one right here is the darker green. And we need to make sure that the HMA color is in the darker green. So okay, so we'll copy this. Actually, we'll copy this whole thing. Alright, paste it here. And then we'll set that equal to this color. Because what this function here is doing is it's passing in the dynamic HMA and all these colors into this function. It's calculating the slope, and then based on the slope, if it's greater than flat and we have high volatility or high volume, then return color 1A. And color 1A is the darker green. But it doesn't matter what color 1A is or color 1B here. All we care about is being above the darker green. And we know this one's darker green, so we know this function's returning a color. So if we call this function with everything that's in here already, don't change anything, and check if it's equal to that color, then we will be able to check if we're above this green bar. Or if not above, but we'll be able to check if the HMA is green. This close right here is greater than dynamic HMA, checks if we're above it. This just checks if it's green. Okay? So close that off. And the last one is the RSI is above 50. So we can do and we do an RSI here, and we'll just do a default RSI with a close and a 14 length greater than 50. And that should be it. So what we can do is we can plot this. We're still in a study, so let's just plot it and verify our signal is correct. So plot by entry, and this is going to be a Boolean. It's going to return a Boolean. So actually, let's plot an arrow, and we still can't use Booleans for plot arrow, but we can convert this to a 1 if it's true and a 0 if it's false. So we're looking for a 1. We'll plot a green arrow. So that's saved, or saving, processing. Alright, I need to add this to the chart, and I'll get rid of the other one that we copied from. And if you look, we have a lot of green arrows. But let's add the RSI in here, and now we can see, is there a 50 line? Well, at least here we can see that we're above 50. It's pretty evident. You know, we're way over it. The line is green, and the price is above the line. And now we're getting the entry signals. So that's his logic, but obviously we want to enter here. So we can change this a little bit. So we just enter on this first green arrow, the first one we get. So we'd enter here, we'd enter here, and we'd enter here. So we just need to make sure, like, we're looking for a change from here to here. We don't want to enter after we've already entered. So to do that, there's a couple ways we can do this. And I'm just going to do this. I'm going to add in crossover. Let me move myself. Getting in the way over here. So crossover takes 2 arguments, an X and a Y argument, and it's looking to see if the X argument is greater than the Y argument after the X argument was less than the Y. So you got to cross. The X is crossing over the Y. So we've got a lot of parentheses here. So this is going to be the Y argument, 0. And right now it's checking if true is crossing over 0. That won't work. So I actually need to convert this Boolean to the 1 and the 0 like we did down here. So if it's true, it'll be 1. And if it's false, it'll be 0. And that'll be our X argument. So it'll be 1 or 0. And then we're going to see if it crosses over the 0. Let's make sure that this is all good. Let's try and save that. And we got a little input error. I probably missed a parenthesis here. That's what it looks like. I think I need an extra parenthesis to close this all off. So I close off this entire thing. Greater than 50. There we go. Had one extra parenthesis in the wrong spot. Okay. So now we're getting one entry signal when we get the crossover from go long from nothing. So go long here, go long here, and go long here. That looks pretty good. That looks halfway decent. You know, we're going long. Like you said, we want to make something here so we're not so far away from the moving average. But even then, you still made some money. But then it came down. Then we go long again here, went up a little bit, came down, and long here. So that's looking good. Here, that looks good. That looks good. This, not so much. But then we immediately get a crossover here to our sell signal. So let's add in our sell logic. We can just copy this, and this should be fun. So sell entry will be when the opposite. So when the close is less than the dynamic HMA, and the dynamic color is not going to equal that, but it's going to equal dark red. So let's see what dark red is. Nope. Maybe this one. Okay, so EB4D5C. Copy that there. So when the color is dark red, and when the RSI is less than 50. And that's it. And we can keep this the same. So our sell entry will be true. When it's true, it'll be a 1. When it's false, it'll be a 0. And when we get a crossover, we'll get the sell entry. So that will only plot once. And to make these arrows look nice, we can put a -1 here. Because the plot arrow function, if you have a positive value, it'll plot a green arrow. And negative value, it will plot a red arrow going down. There we go. Let's verify. We are dark red. The RSI is definitely under 50. And the close is below the HMA. Same thing here. And the same thing here. Awesome. Cool. Now let's make this a strategy. So first things first, change the study to strategy. This is all good. Keep that the same. And all we need to do here is just do strategy dot entry. Put in an ID, which I'm going to name go long. Strategy dot long. When equal to by entry. And crossover returns a series bool. So when we have a 1 here, when this is true, we're doing a lot here. We're going to get this, it'll be turned to 1 or 0. Well, it'll be a 1 in case if it's true. And then the crossover is going to look at it and see that the 1 has crossed over 0. And that will also return a true. So it's going from true to an integer, or it's going from a bool to an integer, back to a bool, into this by entry. So by entry is still a bool. So we can use when true, when equals true, we go long. And we can do the same thing for the short. Sell entry here, change this to short, and change the ID to go short. Save that. And because these are entry functions, they're just going to reverse position every time we have an opposite position. Now let's look. Let's get rid of this RSI. So we're still plotting the green arrows, which is nice. It helps us verify our signals. So this is a signal we're getting, and because we're using the entry function as it is, it sends a market order which doesn't get opened until the next candle on the open, and here we go long. And since the entry function is controlled by the pyramiding setting, and pyramiding is by default set to 1, well, we're not getting entries here. But if we move this, we'll get an entry here. There we go. And we do 2, 3, we'll get another one here. Cool. And then as soon as a short signal comes along, it reverses our entire position and then goes short one position more, one more contract. And we have that here. Very nice. Very nice. So, strategy tester tab. Okay, so we have our strategy in place. We have entry signals and exit signals, but we're not getting the best results. So let's add in the take profit logic here. And it says we can either use a static HMA or use an RSI. And the RSI, I want to use that. So we're going to use when it goes underneath the overbought threshold. When it crosses under that, we're going to exit, and the opposite for when we're short. To do that, well, we can do this with the strategy close function. And it's pretty simple. So strategy close, and we need an ID for the position that we're closing. So strategy close, closing that position, and when? Well, when the RSI, and you know, I'm computing this RSI 1, 2, 3 times already, and I'll probably do it 4 times. So let me just take this out and put it here. That way I can just replace that in the way again, copy this, drop it in there, and replace with RSI. Okay, RSI equals RSI. Now we have that when RSI, and we want when there's a crossover, cross under. So when cross under, the RSI crosses under 70, which is goodbye RSI. Let's add this to the chart again. So this is our normal threshold right here. The upper band right here, 70. So when it crosses underneath that, it's got to go above 70, and then it's going to come back down and go below 70, cross under. So when that happens, we want to close our position. We want to take a profit for the long. And we'll do the same thing for short, but we'll do the 30, and we want to cross over that, because now we're going to go under it, and then we got to come up. We're going to go under 30 and then come up and go over 30 with the RSI. So close the go short position. Now let's see if that improves our strategy a bit. So what do we got here? We have an entry for go long. We're above 50. We're above the green. And then here we have an entry order to close. So here we're getting the cross under signal, because if you look closely, that is 70.05. So we're above it. And then here we are crossing under. And because it's a close, strategy.close, it's a market order. So it will be executed on the next bar. And here it is right here. So that's working. Let's go find a short signal and make sure the short's working. Go short and strategy entry close short. So same thing. We are below 30 at 18.12, and on the next bar we are above 30 at 35. So we've crossed over, and then on the next bar that order is executed and we are closing. Good, good. Now the tester tab looks a little bit better now, but when we save that and reset that, we lost our settings that we put in here, our properties when we put in commission and slippage, and we changed our order size. So we can do that again, fix that up, or we could put it in to our code. In the strategy code, you can put that all in here. So now that we fixed that, let's see. It's loading. Let's see what happens here. Maybe pyramiding will help. Not really. We got a lot more trades, but we're still losing a lot of money. We're bleeding out. So we've added in a take profit here, according to the strategy. Go long. If you close order right after, oh, if we stayed in, we would have made more money. Okay. I want to show you guys a strategy that I came up with. And this one's very simple. Now this is a coin from the exchange called Binance.com. And what they've done in their white paper, they've stated out that every quarter they will burn a percentage of their coin. Basically, when I say burn, it means they will just delete it from existence. So they take the coin out, they use the profits they made based on a percentage of the volume on their exchange, and then they buy back all those coins off the market, and they send them to dev null. They just send them to an address that no one has access to. So they're technically burned. They're gone. They're out of the system, out of the market. And what that does, they've done that so to increase the price of their coin and stability and build trust in their coin. And they've been doing this since they launched, and just a couple days ago they did their 13th burn. And you can see here they always write about it in their blog. They're going to continue doing this until they've burned half of all coins in existence. So what they've done here is they've burned a total of 2,253,888 BNB to date, which is the equivalent of 68 million US dollars. So they've taken $68 million of their own money, bought back their coins off the market, and burnt them. So this is a very good strategy for them, and it's worked out really well. I've done this, like I said, this is the 13th time, and this is the most recent one. They say they just burned 2.253 million BNB, plus they just started another program where they're burning a little bit more. And at the current price, 1 BNB to date is around 30 US dollars. So, actually I'm mistaken. So that was actually this quarter. Just this quarter they burned 68 million. So in total, I'm not sure what was the value of that to date. But supposedly that was the highest ever in fiat terms. So that's the most amount of money they've bought off the market and burned those coins. And you can see the proof here. They have the transaction on the blockchain, the transaction hash, the transaction receipt, and 9 days ago they did this. So what kind of effect does this have on the market? That's what I wanted to understand. I want to understand if you could time this, and if you could buy the coin before the burn happened, or when it happened, or whenever was the best time to buy the coin, and when was the best time to get out. Because this is public knowledge, so people anticipate this. And if it has an effect on the market, you can be sure that people are going to buy because they know about it. So I made this strategy, and it's very simple. So I just took each date that every one of the burns happened. I looked at the transactions on the blockchain, and then I basically plugged each day into the timestamp. I omitted the time, the exact time, for the hour and the minute. This is more of a long-term strategy for me, so I want to hold on to this for a few days, if not a few weeks. So the hour it happened and the minutes it happened doesn't really matter to me. So I just put in the dates. And one thing I noticed was they don't exactly burn on the quarter ends. So like January, February, March, they don't burn on April 1st. They burn a little bit later. So here we have April 15th, and here it's April 16th. Here it's April 18th. So the dates aren't always exact. They're not burning on the same exact day. However, it is somewhere in the same range of days. It's always the second week after. And we can look at January. This is 2018, January 15th, and then here January 16th and January 18th. And July 17th, July 12th, July 18th. So the dates are somewhat all in the same range. And I just added this one for the most recent burn, October 17th. So what I want to do here is I want to buy on this date and I want to sell after. Or maybe I want to buy 2 weeks before this date happens and I want to sell either at a take profit percentage, or a couple days after, or a couple weeks after. And that's what I've done in the code here. So I have an input that I've made, the number of bars to buy before the burn day. And this just takes an integer, and here I have a little multiplier. You can't see this on the input side, but it's just taking time minus time, the previous time, which basically gives me the time of 1 bar. That's how you get 1 bar of time. So it doesn't matter what time frame I'm on, it will always give me the amount of time in 1 bar. So here it'll be 4 hours. If you look at the input, number of bars. Okay. And here I'm using an array. You may or may not have seen arrays yet. It's a new feature of PineScript. I kind of wanted to explore this, and I started working with them. Basically, you have to declare the array, which I've done here in array new int. So I made an integer array. It only can accept integers. And if you look at the syntax here, the 0 represents the size of the array. So I'm just declaring an array called burn dates. That's going to hold an array of 0. So there's nothing in it. And then I made this little function here to help me push new values onto the array. So I'm taking these timestamps that represent the burn dates, and on every single script, every single bar, it's just going to push the same values to this array every time. So it's a little inefficient, but it's very simple, like I said, and I just wanted to make this work. So every time it's just going to push these dates to the array. We get a new bar, it's going to push the dates again. Nothing's going to change. The dates will stay the same. It's just going to keep on pushing them to the array. And they'll be in the same exact order. So I have burn date 1 all the way till burn date 13. So these are all dates. They're all being stacked onto this 1 by 1 array. And I added this here. So if you look at burn push, you need to add in the ID, burn dates, the ID of the array, which array I'm pushing the value to, and then you need to show the value, or what's the value that you're pushing onto the array. And I have this, the burn stamp is what you're passing through into the function, which will be this timestamp function call. So burn 1 will come into here, and it'll be converted to burn stamp just for a local variable in here. And then that local variable, which will be burn 1, will be sent to the value. But I had that value minus this input that I made, which is buy before burn, which is this input. So basically, I'm using whatever you put in here. So in this case, it's 0. So I want it to buy on the exact same day. But let's just say this was a 1. And it will be 1 times the time minus the previous time, which will be the time of 1 bar. And I did that because now I can take that Unix time and I can subtract it from the burn date. So it will give me 1 bar of time minus the timestamp. So you see how that works. Now that's being pushed to the array like this for every single one. And I have an input for a take profit, and I'm calculating the take profit here with the entry price, strategy average, position average price. This is the price of the entry, and I'm multiplying it by 1 plus the take profit percentage. So this will give me a percentage above the entry. And then I have in this second close input that I'm going to be using, it's going to close either when it hits a take profit, or it's going to close after a certain amount of time, because I don't want to be in this trade forever. So I figured, like, okay, 2 weeks of time is long enough for me to capitalize on these gains. So down here, I'm keeping track of the entry time, and this is where I'm taking my entry, and I have my exits here. So basically right here, I'm initializing a variable called entry time to NA. So it's not, at first it's nothing. On the first bar, it's just going to be nothing. And then I'm checking this array. So if array includes, and this is a function of the array that I can use that checks every value in the array, and it checks for that value if it exists. And what I'm doing is I'm going, okay, check if we are on a bar where a burn date exists. And to do that, I'm just using the time variable, which always returns the time of that bar. And it's basically like, is time equal to this value? And it's going to check all these values. Is time equal to this value? Is time equal to this value? It will do it on every bar, and it will do it every single time for every value in the array. So if that value is in the array and we are not long already, if we're not in a position already, then go ahead and store the value of time into entry time and send out a market order. Call it BNB burn, and we're going long. We're going in. Okay? So basically, whenever there's a burn, we are going long. And that depends on if we have buy before burn set to some other value. But right now it's at 1. So 1 bar before the burn, we're going long. If we're on the daily, it's going to be 1 day before the burn, we're going long. That's all that is. Don't get confused with this array stuff. Very simple. And then I'm calculating here the time to exit. So if we're not going to hit a take profit, I still want to get out after a certain amount of time. So I'm taking the time minus the entry time. This is why I have saved this value that we entered at. So the current time minus the time where we entered at, and then I'm just converting it to weeks. So because the Unix time, this variable, is in milliseconds, I need to divide it by 1000, and then divide it by 60 for seconds, and then 60 for minutes, then 24 for hours, and then 7 to get weeks. And now this variable will be represented as weeks, because that's how I wanted it. So 2 weeks after entry to close long. And then my 2 functions to exit are just basic market exits. Strategy close, BNB burn. So when time to exit is greater than or equal to time to close. And we just saw how to calculate that. So time to close is going to be some kind of integer, and it's going to be in weeks. And we could plot this and see what it looks like on the chart. So eventually at some point this will equal 2 if we haven't hit a take profit yet, and then if that happens we'll close here, and it'll just pop up with a comment called time expired. This is what we want here. We want the take profit here, strategy close. So when to close? Well, when the high is greater than or equal to our long take. And as we saw up here, our long take is a percentage of our entry price. Because we're only taking 1 entry at a time, the average price will always be the price that we entered at. And then multiply that by 1 plus 15%. So that would be 1.15 times our entry price. That will be a price higher, and that'll be our take profit. So when the high basically is equal to that or greater than that, then it's time to take profit, and we'll exit. So let's save this, and let's see what this looks like. So you can see here on October 17th, this is a burn date, and as such I'm entering here. But look what happened to the market. It fell right after. So we don't want to be entering the day they burn. It seems like that price move is already accounted for. People have already expected that, so of course they're going to buy beforehand. And you can see here we have another burn date, and the time expired. So we didn't hit a take profit or anything. We just got out after 2 weeks. And let's check that, make sure it's 2 weeks. 14 bars, 14 days, that's 2 weeks. Okay, so if you're buying on the burn date, not a very good strategy. However, this is why I put in these inputs here, so we can kind of look at, what if I buy, 2 weeks beforehand? Keep my take profit at 15%, that's fine. And I'll keep the 2 weeks after entry. So I get in 2 weeks before, and I exit on the burn date. In this case, because it's 2 weeks expired. Now let's look at the strategy tester. Well, now I'm making some money. And it's in BTC. We could change the default currency either in the code or in the settings. So initial capital 10,000. Base currency, since we're dealing with Bitcoin here, it's in Bitcoin, but we can change it to USD or whatever your base currency is. Order size is set to 10% of equity, so 10%, 10,000 should be 1,000 for every order we enter, which will be up to 13 orders. And you can see here, 13 total closed trades, and we have made $466 since the inception of BNB, which, it's been 3 or 4 years now, so it's not the greatest strategy, but I mean, it looks like we're doing okay. It's not bad. So that is a crypto strategy, and it's a quick way to backtest it and see if it's worth buying this coin in anticipation of a burn event. And you can go ahead and mess around with those variables and add in your own logic and make this better.